Economics to this MSME panel session, Catalysing MSME for Employment and Growth, being organized as a part of the third DSC Young Scholars Seminar. We are delighted to have with us on the dais our esteemed chair to this discussion, Professor Pami. Member, Economic Advisory Advisory Council to the Prime Minister. Next, it's my privilege to invite up our panel speakers one by one. Mr. Mukesh Mohan Gupta, President, Chamber of Indian Micro, Small and Medium Enterprises. Mr. Anil Bhardwaj, Secretary General, Federation of Indian Micro and Small and Medium Enterprises. Next, we have Mr. Tapan Sharma, Deputy General Manager and Head, SBI NCR Haryana. And now, we have Mr. Deepak Pathak, Lead Data Scientist, IDFC First Bank. We welcome all of you to the discussion. To begin with the proceedings, I would like to briefly introduce our chair and our panel speakers. Beginning with our chair, Professor Pami. Professor Dua is member of the Economic Advisory Council to the Prime Minister. She is a senior professor of economics and former director of the Delhi School of Economics. She has also served as an external member of the first Monetary Policy Committee of the Reserve Bank of India. Now, I would like to introduce our speakers, starting with Mr. Mukesh Mohan Gupta. Mr. Mukesh Mohan Gupta is the president of the Chamber of Indian Micro, Small and Medium Enterprises. He has been a very strong advocate for MSME development, focusing on industry linkages, policy engagement, and entrepreneurship promotion. His leadership plays a key role in strengthening the voice of MSMEs at national forums. Now, we have Mr. Anil Bhardwaj. Mr. Anil Bhardwaj is the Secretary General of the Federation of Indian Micro and Small and Medium Enterprises. He is widely recognized for his work in MSME policy advocacy, trade facilitation, and regulatory reforms. He actively engages with government bodies to improve the ecosystem for small and medium enterprises in India. Now, we have Mr. Tapan Sharma. Mr. Tapan Sharma is the Deputy General Manager and Head of Business and Operations at State Bank of India, NCR, Haryana. He brings extensive experience in banking operations and MSME financing. His work focuses on strengthening credit access and financial inclusion for small and medium enterprises. And at the end, we have Mr. Deepak Pathak, who is an alumni of the Delhi School of Economics, who is presently a lead data scientist at IDFC First Bank. He specializes in leveraging data analytics and technology to drive smarter banking decisions. His work highlights how data-driven insights can transform MSME lending and financial services. Now, I would like Professor Pami to take over this discussion. Thank you so much.
Well, thank you very much. I warmly welcome all of you to today's panel discussion on catalyzing MSMEs for employment and growth. At the outset, I thank the organizers first for organizing this dynamic conference, and I congratulate them for doing a wonderful job with this. And I also thank them for inviting me to chair this very useful, very insightful panel discussion with distinguished panelists. So as you can see, we have highly distinguished panelists with us, and we look forward to their recommendations, their insights, their perspectives on MSMEs. We also have with us a dynamic audience. We have, including here, students who are very intelligent, very curious, very enthusiastic, and they are all eager to hear from all of you. So before we start the panelists' views on this topic, I would like to say a few words just to set the stage. As we all know, micro, small, and medium enterprises form the backbone of India's industrial economy, accounting for 35.4% of the manufacturing sector, almost half of exports, and nearly 1/3 of GDP of the country. With over 7 crore enterprises employing 32.82 crore persons, the sector stands as the second largest employer after agriculture. The MSME sector thus plays a vital role in driving job creation through enhanced manufacturing growth, industrial credit growth, and increased integration into global value chains. In particular, MSMEs have a special role to play in increasing participation in global value chains as they account for a considerable share of exports of India. Therefore, enabling productivity improvements in MSMEs is imperative for India's high-growth, job-rich strategy. In fiscal year 25-26, the MSME sector was hit hard by global headwinds, especially due to geopolitical uncertainties and trade tariffs imposed by the US. Sectors like textiles, gems, jewelry, chemicals, auto components, seafood, and engineering goods, where MSMEs dominate, were most affected, facing substantive export declines to the US. Nevertheless, the recent trade agreements with the US, EU, and other trading partners bode well for boosting competitiveness and growth of MSMEs and thus job creation. In line with the strategic importance of the MSME sector, the thrust of the 2026-27 Union Budget was on creating champion MSMEs for a global India. The budget focuses on increasing productivity, improving financial and liquidity access, and simplifying regulatory frameworks, specifically with respect to this sector. Some measures proposed in the budget indirectly support the growth of MSMEs, such as the focus on building infrastructure. The Research, Development and Innovation Scheme also facilitates a growth trajectory promoting innovation, R&D, and sustainable development, benefiting the MSME sector along with others. In sum, these direct and indirect measures aim to address credit access and scale up challenges while boosting formalization and competitiveness in the MSME sector. With this, I start with the panelists, and the ground rules here are that each panelist gets about 15 to 20 minutes. 20 minutes is the maximum, because as I said, we have an enthusiastic audience here and we want to allow enough time for them to interact with you, to learn from you, to understand the issues involved in the MSME sector. So to begin with, we start with Mr. Anil Bhardwaj, who has already been introduced. He is the Secretary General, Federation of Indian Micro and Small and Medium Enterprises. And my question to you, sir, is that I request you to provide your assessment of the current status as well as challenges faced by the MSME sector, and this will very much help us to progress with the rest of the proceedings of this panel discussion. So thank you very much.
Thank you, Professor Dua. Thank you, Professor Dua, and thanks, Professor Ram, for inviting me, my fellow panelists. First of all, guys, I'm envious of you. You are all part of DSC. It was not until I joined my profession as export manager and later as a trade professional in my career that I realized how important this institution is in shaping up the policy not only of India, but I think almost all multilateral institutions. The students of DSC are everywhere and at very, very important places. And I'm also quite mindful that first of all, I'm speaking to scholars, and that to young scholars who have open minds. So before I get into the topic of today, I think let's count our beans, so to say, that how much is the size of MSMEs, how much is the number. So we can approach this in order to have a sense of the size of the sector from three means. One is the MSME census, which was last conducted in 2004-5, and later on it was stopped. The second is the economic census, which is comparatively a very robust measure, and the last census 10 years ago, which threw a number of approximately 64 million enterprises. So idea is that whosoever is not working in the farm and is not a government employee or is not working in a corporate sector, it is a self-employed person, is counted under the economic census. So 64 million 10 years ago is a good measure. So we'll be reaching approximately a range of 70 million plus in today's numbers. Another measure that has recently come up is from Ministry of MSME. It is the Udyam portal. So if anybody is interested in setting up a business, has already set up a business, they can go and register. You can also go and register. The current number there is approximately 75 million. We really don't know how many are actually operating, but this is a number which gels well more or less with the economic census number 70 million plus. So this is currently the size. But the Udyam gives us another nuanced information about the segments of this sector. So we have approximately 30% of it, 1/3 is retail, 1/3 is services, and 1/3 is manufacturing enterprises. So to say, if you combine both retail, because retail is also a service, and other services, so 2/3 of the people working in the MSME segments are essentially working in the services segment. And 1/3 is manufacturing. Now, these numbers are large, but at the same time, there is a flip side to this number, and that I think need to tell you also, that when we have 75 million enterprises registered in Udyam portal, we have barely 30 lakh industrial connections in the country. So the gap is very large. So that means most of the people are working without using formal access to industrial connections, so they may be informal enterprises. Further, this fact is exacerbated by the fact that barely 2.5 lakh enterprises are factories. Factories means, as per Factories Act, entities that are employing more than 10 people. So out of 75 million enterprises, we have barely 2.5 lakh enterprises which are employing more than 10 people, or which are quote unquote part of the organized sector, because in India, organized sector is that are ultimately registered with the Factories Act. So one lesson we draw, or one insight, important insight we draw from the discussion so far, is that much of what we have in India is informal sector. Coming to the challenges part, we had seen there are three segments, so I'll quickly say a few lines about each. One is the services, retail, and manufacturing. In services enterprises, the problem in India, or the challenge, is of the scale. See, most of our lending policies are driven by, or you can say are facilitated by collateral-based lending. Till very recently, things have started changing with a couple of institutional reforms, but by and large, most of the credit is backed by some kind of collateral security. So that means scaling up becomes an issue for the services sector, because they don't have much of collateral. They don't have physical machines or land and building, for example, in the equivalence of manufacturing. In retail, retail used to be India's default employment. Whosoever could not get employment anywhere, दुकान तो खुला ही देंगे, दुकान खोल के बैठ जाओ भैया. So that has been a default employment generation. It's not that they have opted this as a conscious choice, but it was a default choice. If you don't have anything to do, start with retail at least. So starting from a blind woman selling bananas on the roadside to enterprises having a turnover of more than 500 crore, this is a very large segment, very heterogeneous sector. So retail is now in India has started also experiencing tremendous pressure from two counts. One, from the organized retail. So like the Reliance of the world and the Pantaloons of the world, and the large format stores have started coming in. The US experience or the experience of the European Union is that wherever a large format stores come up, the mom and pop stores sales are down by 10, 20, 30, 40% over a period of time. And then very recently in the last 2-3 years, another challenge that has come up is e-commerce, and that to quick commerce. Quick commerce is sort of creating the biggest challenge for the mom and pop stores, Kirana, typical Kirana stores, because most of you guys, I think you are experienced, instead of going to the shop, what you do? You just order with the quick commerce company. And that is also creating some kind of a challenge. So services, scale, in retail, you see the e-commerce, quick commerce, large format stores. And in manufacturing, manufacturing is quite complicated. First of all, we have to distinguish between services and manufacturing from the fact that manufacturing is subjected to the discipline of imports. You might be aware that under WTO, we have signed an agreement that in manufacturing, we have opened up manufacturing, everything can be imported freely. Not with the services sector. With services sector, in any case, some difficulties are there. You can't consume services the way you can consume the goods in a particular place. Let me give you an analogy and explain that how it is. You must have heard about a city, Meerut, quite nearby. So Meerut is a cluster for scissors also. So if the manufacturer of Meerut is not competitive in manufacturing produce a scissor which is liked by the consumer at a price and quality that you want, then instead of the Meerut scissors, you would be consuming you would be buying scissors from made in China, made in Korea, made in Taiwan, etc. And that's what we see. But so far as the hairdresser is concerned, the hairdresser is not coming from China. So the competition in the services sector is very different from the competition in the manufacturing sector. Competition in the manufacturing sector is global, right from the day one, except a few set of items, either that has very small shelf life, maybe you're better for dosa, or maybe a bread, etc. Maybe that can't come from China, at least in the near future. Or maybe where can say the transportation cost makes it unviable to import from different places, like cement pipes. So if you exclude those items, most of the products could be imported, and that's why manufacturers face a lot of competition, and that's why. Try to remember when in the classrooms that one of the major challenges India is facing is that we had not been able to move the needle of manufacturing's contribution in GDP. That remains almost the same for several decades now. It is difficult, it's challenging. In manufacturing, we face challenges on several counts. One is the factors of production. So be it land, be it people who are not trained and skilled properly, access to finance also. Banking sector in India remains largely in the hands of the government. Almost 60% of the sector still is in the hands of the government. We are the perhaps only country in the world, a large economy, where government is very, very is present in the sector to such a large extent, holding almost 60%. And Professor Vivek Debroi, who used to head Prime Minister Advisory Council as chair, who used to say that India's banking sector, the public sector banks are perhaps the world's largest monopoly. So I think this is very important. And finally, the last challenge is in technology. So if we are comparing with our competing nations like China or Taiwan or South Korea or Japan, even Indonesia, and even Vietnam these days, we see that in manufacturing, most of our MSMEs particularly are lagging behind, except maybe one or two sectors, maybe in pharma, if we leave, or maybe in auto components for the moment. I think in most of the other sectors, we are living by 5 to 10 years behind in technology curve than the competing nations. So these are the set of challenges that we are facing. And I'll just close before I close. I'll take just one more point and touch upon, if with the permission of the chair, on one important announcement that is there in the budget. Of course, I think my colleague Mr. Mohan is there, and he's I think would be explaining maybe in more details that new announcements in the schemes and other things. Instead of that, I would like to touch upon very important announcement that has not got much attention in the budget, and that is a new program on Tier 2 and Tier 3 cities. Now, much of the squalor and the disintegration that we see in the Tier 2 and Tier 3 cities is primarily because of non-functioning or poor functioning of urban development bodies, urban local bodies, or municipalities. And their problem is that they have not been able to generate enough resources from within their standard revenue streams like the taxes and others. And especially so after GST came, as you know, the earlier before the GST, we used to have octroys in the city, so that was their major source of revenue. But once GST came, ultimately the money that used to be collected by them ultimately is connected by the GST mechanism, and then it is dissolved under the Finance Commission formula to the states. But the states are not really giving much money back to the districts and the Tier 2 and Tier 3C, and that's why I see the difficulties. And one major issue here is that a couple of years ago, 2 years ago actually, we did a study in Merit that what are the drivers in a city of economic growth. And we found, for example, in a place like Merit, there are 12 industrial clusters and 6 services clusters that were driving the growth. And when we try to find out that what is impeding the growth of those drivers, almost half of the problems were related to municipalities and urban local bodies. So the functioning of urban local bodies or their efficiency can transform the nation in terms of not only the economic growth and prosperity and the quality of life. This is very important. And further study found out that, you know, in most of these places, the urban land bodies or municipalities have not audited their accounts for decades. So that's why they had not been able to raise funds through the bonds. And how important it is for the municipalities to raise bonds and the money, I can tell you from one example and I close. In US, there are over 40,000 or so municipalities, and they raised collectively $4 trillion, equal to the amount of GDP of our country, by the municipalities in order to invest in roads and basic infrastructure, civil infrastructure, schools and colleges, and that's why you see the cities are better managed, better placed. I think this has been a very, very important announcement that needs to be studied further, that what has been done. I think approximately 4 lakh crore has been marked out, and there are very interesting and innovative, you can say, instruments are allowed, like challenge funds through that. So I think that need to be studied, but I think I'm very optimistic that, you know, this particular initiative can transform the Tier 2, Tier 3 cities, economic growth and quality of life. With that, I rest my case. Thank you.
Thank you very much, sir, for an insightful analysis of the challenges being faced by the MSME sector, whether these are to do with formalization, competitiveness, technology, or sector-specific manufacturing versus services, as well as imports of goods. So in this context, I would now turn the attention to the union budget. And I would like to ask, what are the measures that have been mentioned in the union budget? How does the government want to address these challenges as well as other challenges? And for this, I request the expert on the union budget, expert on the MSME sector, Mr. Mukesh Mohan Gupta, who is President, Chamber of Indian Micro, Small and Medium Enterprises, to share his perspectives on how the budget plans to address these challenges and uplift the MSME sector, which is very important for job creation. Mr. Mukesh Mohan Gupta, please. Yeah.
Thank you, ma'am.
Thank you, ma'am. It is my privilege to be part of this panel discussion, and that too in Delhi School of Economics. The topic is very, very important. And जब भी हम इस तरह के कॉलेज में आते हैं, I always feel more younger actually, and the topic is also young scholars session. So thank you very much, Professor Ram Singh ji. I really admire Professor because of the reason that the passion he has for MSME sector, for startup sector. It is great, in fact, to see a professor thinking for entrepreneurship, for the startup. A big round of applause for Professor Ram Singh ji from. Thank you very much, sir. So I always feel that this government is very much concerned about the growth of MSME and startup sector. I will add startups also to this because I feel that some of you may be interested in starting your own startup. And my wish is that currently we have about 2 lakh startups registered in the country. These numbers are very less. So we need more startups to be registered, and about 120 unicorns are there. I wish that some unicorn should come from DSC with the passion Professor Ram Singh has for the entrepreneurship. Friends, currently Mr. Anil Bhardwaj has already discussed about the numbers we have with us as in MSME units. But can anybody of you tell me what is the definition of MSME? So MSME currently covers all type of businesses, be it manufacturing, service or trading. And the definition is that any enterprise up to the turnover of 500 crore is covered under micro, small and medium enterprises. So to me, more than 95% businesses in the country are run in the ambit of MSMEs. These MSMEs employees, as per the official data being published and available with the government on Udyam portal, is more than 37 crore. We can imagine that out of the population of about 140 crore in India, if we have more than 37 crore employees being employed by the MSMEs, if we consider a family of 4, what is the amount of people being dependent on these MSMEs? More than maybe 120 crore are dependent on this sector as an employee. There are many announcements in the budget. Since I have been asked to cover the budget announcement, and this is not the first time. Budget, I always feel, is an event, is a roadmap by the government, what they see, and the government is also confident then if we want to make a Viksit Bharat, a developed India by 2047, MSMEs are the only gateway through which we'll be able to achieve this target. Not only in this budget, I'm just observing since last many budgets, and I always used to say that this is not a budget, this is an MSME budget. Because they generate employment as well. And they contribute, as Madam was referring to, more than 1/3 contribution in the GDP is by these MSMEs. So some of the announcement I will like to discuss which have been there in the budget. But I have seen that on 1st of February the budget was announced, and since then so many announcements have been made for the MSME and startup sectors. Even perhaps the government is also not satisfied that whatever they have announced in the government is not, maybe not enough, ya fir dil mange more. maybe by these MSME and startup and by the government also from these MSME and startup. As far as the problems being mentioned by my good friend Mr. Anil Bhardwaj ji, lack of credit and loan without any collateral security, I suppose the government is very much concerned about the loans to MSME startup without collateral security. The government has schemes which is called Credit Guarantee Trust for Micro and Small Enterprises. Micro and small enterprises are, so there are three classification: micro, small and medium. As I told you, the medium enterprise up to turnover of 500 crore and the investment criteria also. But small enterprises are those having turnover of up to 100 crore and investment in plant and machinery up to 25 crore rupees. So there is a scheme for these micro and small enterprises for a loan without any collateral security up to 10 crore rupees. For the startups also, if you want to do any startup, so good news for you. For the startup, there is a scheme called Credit Guarantee Scheme for Startup, and you can get loan up to 20 crore rupees without any collateral security. As I told you, the definition of MSME, so there is definition of startups also. Till the announcement of budget, the definition of startup was that the maximum turnover should be within 100 crore, and any enterprise can be classified as startup within 10 years from the date of its incorporation. There are some other conditions also, like any startup can be either in a private limited company, an LLP, or a registered partnership firm. It should be innovative type of thing. But the maximum turnover was 100 crore and 10 years from the date of incorporation. Even after budget, this definition has been changed, and now any enterprises within these three constitution and innovative type of activities up to 200 crore turnover will be classified under startup, and this period of 10 years is also increased from 10 years to 20 years for deep tech enterprises, and the turnover for deep tech enterprises has been increased even more to 300 crore. Some of the another support being given by the government to the MSMEs and startup is that if you have a startup and you don't have any product, only the proof of concept is there, and even if idea you have a scheme called Startup India Seed Fund, wherein you can get up to 70 lakh rupees in the form of equity or the debentures. So in this budget, government has announced 10,000 crore rupees as a SME growth fund. And this SME growth fund, like there is already startup growth fund, they are based on the mother-daughter concept. Means government invest maybe some 10,000 crore rupees, and they give this fund to the venture fund. They contribute about 4x into from their funds, and ultimately the startups get approximately 50,000 crore. So additional 10,000 crore rupees have been announced in this budget for SME growth fund, which earlier was for startup. This year, this 10,000 crore rupees, I suppose with these 10,000 crore rupees, perhaps another 50,000 crore rupees will be available for growth of the micro, small and medium enterprise in the form of equity capital. There is a fund called SRI Fund, Self-Reliant India Fund, which is being run by NSIC. Additional 2,000 crore rupees have been given in this budget towards this SRI fund, which will be given to NSIC, and NSIC will in turn give it to the alternate investment fund, and they will also invest about 4 times of these 2,000 crore rupees. So about 10,000 crore rupees will be available, and important thing is that this SRI fund top up is only for the micro enterprises. The problem being faced by these MSMEs is actually the lack of funding, and that too from the collateral security. For this, in this budget, there is a platform called TRADS, Trade Receivable E-Discounting System, meaning thereby that whenever you raise any invoice, your payment is, your bill is discounted by the lenders and you get the payment immediately, because one of the problem, very major problem being faced by these MSMEs is delayed payment, for which there are various provisions under the Act. There is an MSMED Act, Micro, Small and Medium Enterprise Development Act, which was enacted in 2006. That has many provisions, and one of the provision is that payment to any micro and small enterprises has to be made within 45 days. Nahi karte, then interest at the rate of 3 times is to be given for the period which is beyond 45 days. And there are many other provisions to this delayed payment problem, like in last to last year budget, Honorable Finance Minister has announced one Section 43BH of the Income Tax Act. Maybe many of you will be aware that if anybody doesn't pay to the micro and small enterprises within 45 days, and any bill is outstanding as on 31st March for more than 45 days, that expenses will not be deducted from the in the balance sheet of that organization, and it will be added to the profit of that institution. There are other provisions like Form MSME 1 under the Ministry of Corporate Affairs and so on and so forth. TRADS is also a platform wherein the bill is discounted immediately at a very competitive rate. Now various provisions have been introduced. There is a provision that every CPSC and any corporate private company having turnover of more than 250 crore need to be onboarded on this trade platform as a buyer, which was actually not happening. Even if they were registering as a buyer, the bills were not being discounted, because for the bill discounting, the acceptance of the invoice is required from the buyer, which was not happening. Now the Finance Minister has provided that every bill of MSME to the CPSCs will be routed through this trade platform, and it will encourage other states, government enterprises and the private sector enterprises as well. One very important announcement has been made in this budget, which may be of interest to you, that there will be corporate mitras, because these MSMEs have a problem of a lot of compliance burdens. So in tier 2, tier 3 cities or small villages, maybe that professionals are not there, CA, CS, cost accountants are not available. So these 3 institutions have been asked to create corporate mitras. I am happy to share, I was just discussing with Professor Sir also, that we at Chamber of Indian Micro, Small and Medium Enterprises also have MSME Mitra, which goes to the MSMEs of their area, provide the services, assist them, handhold them, and in most of the services they don't charge even a single penny from them, and we have designed a system wherein we from the chamber pays handsome amount to these MSME Mitra. I suppose in the same pattern now the government is introducing these corporate Mitra. Many of you, I don't know, but many of you may be interested to be a corporate Mitra, those who have a vision to be an entrepreneur and to do your own business, service sector as in corporate Mitra. So this is another announcement. NBFCs are playing very important role in funding to the MSMEs, that to collateral free loan, business loan, unsecured business loan. So the government has proposed in this budget that they will restructure the non-banking financial companies. And friends, what I have seen, that the government announces and implementation is also there in a very short period. Sometimes I have seen that there is a budget announcement, and I was discussing with some very senior bureaucrat, and he told me that the action has already been started, and first meeting will be on the second day of the budget. So PFC, Power Finance Corporation, and REC restructuring has been proposed in this budget, but Reserve Bank of India has immediately announced some ease of doing business as far as the NBFC is concerned, that NBFCs, certain class of NBFCs with 1,000 crore of business will not be required to take the registration with Reserve Bank of India. There are many, so these 2-3 announcements were marked as the champion for MSMEs by the Honorable Finance Minister. But when I went through the budget, I found that not only these 3-4 announcements, but every announcement is related to MSMEs. And I'll try to discuss this in short because I suppose the time is the constraint. So like it has been proposed in this budget that there will be a high-powered committee on banking to make an Viksit Bharat. I am confident that this committee will have in their agenda one very important subject, which will be loan to the priority sector, which covers the MSME and agriculture. There is any scheme being announced in this budget, which is She Mart. So this is especially for the women entrepreneurs, and they will have retail outlets, and the government will assist through this She Mart. There are announcement related to the sports goods, as Mr. Anil was referring to the Meerut. So there is a cluster for the sports goods also in Meerut and many other places. And when we talk about the dedicated initiative for sports goods, so I am confident that most of these sports enterprises are within the ambit of micro, small and medium enterprises. One announcement I was just going through that there will be a girls hostel in every district. So currently there are about 800 districts in the country. When 800 girls hostel will be developed in the country, who will manufacture the sanitary item, the electrical item, bricks and all those things. I suppose these are the MSMEs who will be benefited. Then announcement has been made for the textile parks, then a scheme for Mahatma Gandhi Gram Swaraj initiative is announced. Under this scheme, the khadi, handloom and handicraft type of industries will be supported. Then those who actually don't want to directly start their business or say for manufacturing, government has many schemes for them also. There is a scheme announcement for education to employment and enterprise. So you are getting education here, the government will support you in employment and creating the entrepreneurs also. Some of the young youth may be interested to be an allied health professionals, and government in this budget has announced that they will support more than 1 lakh AHPs. Then many young youth may be interested to take the profession as care ecosystem like yoga, wellness. It has also been announced that the government will create and educate and skill about 1.5 lakh caregivers. Upskilling of more than 10,000 guides will be there, because we have a lot of tourist places in our country. These guides will, and these professionals, whether they are caregivers, whether they are guards, guides, where they are allied health professional, I suppose they all are the startups and the entrepreneurs into the service sector. So for the manufacturing sector also, various announcements have been made in this budget for particularly 7 sectors. So there are announcement, and the implementation is also very fast. Recently, Reserve Bank of India has also announced that now the banks are mandated to give collateral-free loan up to 20 lakhs rupees. Earlier, this limit was 10 lakh only. Now it has been doubled, and loans up to 20 lakh rupees. So you are most welcome. If you want to start your business, you can go, you can approach any bank, and for up to 20 lakh rupees, no bank can demand any collateral security from the startup or MSMEs. So as I told in my initial address, that I wish some of you should come forward. You will definitely be supporting the India's Viksit Bharat vision also if you start your own enterprise. So जैसे मोदी जी भी कहते हैं कि आप you need to be not an employee. You have to create a lot of jobs. Even if you start a small business, you can employ maybe 3, 4, 5 people, and you can serve their family also. You can serve the countries. So thank you very much for giving me this opportunity. Thank you.
Thank you very much, Mr. Gupta, for an excellent exposition of the measures announced in the budget, both for the MSME sector as well as startups. And some of these measures directly will impact MSME growth, whereas others would indirectly, through various channels, boost MSME activity. Now, one of the things that you mentioned was funding being a major constraint. And as we know, industrial credit growth is very important. And the budget also tries to address liquidity access, financial access. As you mentioned, you gave various examples. So I now turn to the financial aspect of MSMEs. And who else could better answer this question? We have here Mr. Tapan Sharma, who is Deputy General Manager and Head Business and Operations from State Bank of India. So I address this question to him. Mr. Sharma, from a lender's perspective, we would like to hear from you on the changing patterns in MSME financing, and if you could also give us some insights into any new initiatives that have been started in this context.
Yeah, thank you. Thank you, Professor Dua, and thanks to Professor Ram Singh for giving me this opportunity to be amongst the bright students of Delhi School of Economics, along with the distinguished panelists. I would really, we heard about the budget announcements, we heard about the backdrop of MSME industry, how important it is for the country in respect of job creation, in respect of GDP contribution, everything. But everything ultimately it boils down to from the lending point of view, and where ultimately the availability of the funds. Yes, of course, the government makes the budget announcements. The Reserve Bank regulator also nudges the lending institutions to see that the credit is made available to the deserving people. Not only made available, it is made available timely. It is made available in the right amount, right quantity, and at the same time, hand holding as well as nurturing the MSMEs, because they start from the beginning. I will just take you with the background. There is one concept which has been discussed also, that the Reserve Bank is the regulator of the banking industry, and they have classified certain priority sector also. And MSME falls into the priority sector. So there are, suppose a lending, suppose I lend 100 crore, 40 crore overall has to go to some priority sector. There are multiple exports. MSME is also one of the key factor into that. That is subdivided into micro and all. But we will be surprised to know that even after that, most of the banks fail to achieve the priority sector number. Now, from the lenders or the bank's point of view, if we talk, why the banks fail to, or do the bank have any incentive or disincentive if they are not achieving the priority sector numbers? So from the bank's point of view, if you say, lender's point of view, if the bank does not achieve the given priority sector percentage of lending, they have to invest that shortfall either into RIDF, we call Rural Infrastructure Development Fund, or they have to buy or the purchase the priority sector certificate from the market. So that investment, if the bank makes, it is at very low rate. For example, if the bank invests in RIDF, the pricing or the rate they might be getting, the interest would be in 4% or so. But at the same time, if we lend to the market, the interest rates are much higher to that. So it's ultimately, it is even the investment, what I get the return is even less than my cost of funds, cost of deposit rather, I would say. So obviously the lenders will have to look at this from the point of view. And today there is a study, we heard that there are 70 million Udyam registered MSME in the country. The assessment, if we talk about, there is a portion of capital from the promoter and the lending. If we go on the thumb rule of 3:1, the total formal lending requirement is something around 64 trillion, 64 lakh crores for the MSMEs, which is the formal requirement. And the lending which has been, they are into it is around 34 lakh crores. So the study says there is a credit gap of around 30 lakh crores, which is there, means from the formal side. Yes, obviously they might be funding from the informal sector, from the money lenders, from their own and or whatever. This, why it used to happen? Because the traditional lending methods used to be, as discussed, more of a collateral based. The assessing officer or somebody who is, it's more dependent on the person's perception about the business, because every business carries a risk, and the bank is ultimately a commercial organization. So the non-availability of the collateral, non-availability of the documents, proper documents, more or less dependent on the bank may ask for the audited balance sheet, and at times we cannot expect a person who is just opening a saloon, for example a department store or something in the rural area or anywhere, may not be having all these documents. That's fair enough, and that is one of the key reason the lending gap from the, at least from the scheduled banks, and the NBFC also came forward, but the availability of collateral and the documents, etc., might be one of the reason that the gap is there. But there has been a sea change in the last few years in the country from the MSME lending point of view, from the lender's point of view, as well as the data also supports how the lending is improving, the credit gap is squeezing, rather we would say. The change, the background, if you go, one of the major change which started with the demonetization. I will just take you back. Demonetization made certain changes. The cash was slowly replaced towards more and more the economy getting into digitization. Today we see a vegetable vendor also has a UPI. So ultimately UPI use and the money comes into the account. Then the GST reforms. More and more units are coming into GST platform and all that. Then comes the credit information reports and all that. Why it is very, very important? Because now each and everyone in the country is more or less have some digital footprint somewhere. Some digital footprints are there. And that is how the old pattern of lending is now shifting from collateral based or maybe from the balance sheet based finance to more or less cash flow based financing. And this is bringing, I will just give you one example from the cash flow based financing. There is a digital model created by, if I since represent from the State Bank, but most of the banks now have it, which is called like a business rule engine. Because of the availability of the digital platforms, for example, anybody is coming for any lending, the loan can be assessed and in principle approval can be given within no time, means instantly. And the process itself is straight through process can take maximum 35 to 40 minutes and it can be approved. How it is happening? Because now with the availability of the API integration, digitization and all, the lenders have developed a model which we call as a risk model, wherein any applicant with the availability of GST, we get the GST return data which indicates how much sales is being done by that company or by that unit or by that person. It's not necessary, even those who are without GST also, then on the basis of their account statement is obtained, digitally uploaded. Income tax return, it is directly sourced from the integrated from the income tax site, right from the source, and the credit information reports and all that. All these data put together and with the use of AI and machine learning, we call it, this system will come out with a decision, objective decision at that moment itself. Is it a go? Yes. Are you eligible for the loan? Not eligible for the loan. If you are eligible, this is the eligibility. I believe this is like working capital requirement or if it is a term loan also. So this is one of the very, very important game changer which has happened in the last 2 years. State Bank has started the first, and if I give you the numbers are really very, very encouraging, and from this we call it BRE, business rule engine. The bank has sanctioned 2 lakh loans worth 52,000 crores in this period of 18 months. If I see the same from the year, it is 2.5 times more than what the bank used to sanction in this segment. I am talking about from the small to up to 5 crores. So this is one major change. And why this change is happening? because the government has come out with the CGT MSE guideline also, because ultimately the bank is taking a call, the business has a risk, and what is the lender's perspective, whether he or she will be able to repay whether the business will generate enough cash flows to repay the loan. CGT MSE has been a great game changer, because the traditional mindset from the lenders also used to be, if somebody is giving his house or somebody is giving his property, then it means he has a intention to repay. That used to be the traditional mindset with the lender's career. Because I'm talking about myself also, with the 23 years in the bank and mostly 20 years in the MSME or the large corporate throughout my career. But that mindset has gone a tremendous shift in the last maybe I would say 4 or 5 years. Two aspects. From if I talk about not just from the customer's point of view, from the lender's point of view also, because CGT MSE coverage gives the bank a straightway 75% security. And rather, the figures show that instead of asking someone to give a collateral or a home as a mortgage, we as a lender now prefer to take CGT MSE coverage, because it has a lesser operational cost, operational involvement. Because you take a house, if something goes wrong, if suppose you have to go into auction and all that, that carries a lot of operational cost, operational involvement, title clearance report, you take valuation, this and that. Here in CGT MSME, straightway it is the government which comes back. So that is a great initiative taken by the bank to support that. And from the entrepreneur point of view, MSME point of view, there is no requirement for the CGT for any of the collateral. So this one lender's point of view, if I say this, there has been a great shift from the funding. Lot of other initiatives, if I say about, like a startup, if we talk, startup obviously carries a different sort of risk. There is a proof of concept, we said, and we really want that more startups come, and people from you also come up with any of the ideas. There has been a great emphasis and support to the startups. Though there is no, what happens is the lender, we see the track record at times. We want, okay, how you are doing last 3 years, what was your performance, what will be your projections and all that. In a startup, there's nothing. It's an idea. It's an idea which is, proof of concept is there. Some seed funding might have come from the, as you suggested, the government also come, or many of the IITs and all that. There are multiple incubation centers which promotes. But there is no background available. To address this, the same financing model cannot be applicable there. It's more of a venture capital sort of thing. So the industry as well as the lenders have come out with a separate policy, separate risk model for financing the startup. And I'm very happy to say that right now, when I'm heading the NCR part, we have a dedicated startup branch. There are only 6 branches in the entire country. One of them is at Gurgaon. The model is totally different for funding, and we have onboarded 28 startups which are just on the proof of concept and from the credit facility. Why the bank is promoting, but at the same time there is another government push. The government is giving guarantee to the banks to support that. So therefore, it's a great combination from both the sides, because the guarantee trust, ultimately the bank is also a commercial organization. So there is a support, and at the same time the entrepreneurs coming up are getting adequate funding at the right time. So this is another aspect which I would really urge, that this is can be a big game changer. And a lot of startups are coming up which have become unicorn, and we have seen in the NCR part itself. That I have seen the journey. I've been now in Delhi. It is my 4th year. I have seen business growing and the valuations going up in 2 and 3 years once the concept is accepted and all that. A lot of activities are being done from the, and it's not restricted just to lending part, also to provide some guidance from the compliance part, how to establish it, how you can approach the bank and all. This is one part. Another is if we see the change in the lending pattern, is the trades platform. It all reflects how the MSME is giving the focus and opportunities. Any MSME supplying to any of the industry major, once onboarded on the platform which is authorized by Reserve Bank of India, if he uploads any invoice, for example, I am the seller, I have sold to any buyer, industry major, and if the buyer is mandatorily, if it is a turnover of more than 250 crores, has to be mandatorily onboarded on this. and obviously the now public sector units have to mandatorily go through trades only. Mandatorily, each and every bill they will pay on the, we call it government e-marketplace and all that. Everything has to be paid through trades platform. So the seller can upload the invoice or the buyer can upload the invoice on his behalf, and the buyer will agree. For example, I am selling to Tata or any big corporate. I supplied, I raised a bill of X amount, accepted by the buyer. That's just a transaction. Okay, I will pay this. And on that platform, there are financiers available. All the banks, lenders are there. They will bidding at what rate you are discounting this. So multiple banks are bidding, whatever rate, plus minus, plus minus. Finally, the seller or the buyer who will pay will accept it. Okay, this rate I am okay. And the immediate payment is done to the MSME. And it is without recourse. Recourse in the sense, in case somebody fails to make the payment, because ultimately now the buyer is, the bank has made the payment to him, it will be on the industry major, not on the MSME. So these are great initiatives. The MSME is now getting the funding, immediate funding, at a very, very competitive rates, no security, no collateral, end-to-end digital process. End-to-end digitized process, because on just within no time you can get the funding. So these are some things which are really making a transformational shift from the way the credit used to be made available to the industry, particularly MSME. Now the CGTMSE coverage has gone up to 10 crore. The bank also, the business rule engine which I spoke about, purely a digitized journey, it is now started with 50 lakh, increased up to 5 crore. Most likely it will go up to 10 crore. And one important from the lender's point of view also, the delinquency or the account irregularity, etc., is also much lower than what it used to be when the bank used to assess it from their traditional methods, which we followed for so many years. Important is one aspect is coming up now from this, more and more formalization of the economy. MSME is just getting registered on the Udyam. If somebody is eligible for GST, they are there. The banks are available. Banks are ready to finance, because the banks are also given backed by the guarantees. And obviously it is an area which is a priority sector lending, which we call. So balance sheet finance to cash flow finance is the word now. There is no requirement of collateral. Collateral has a more cost for the bank rather. But the only thing, yes, collateral, if somebody comes up, if any customer comes up and offers it, because the credit guarantee has some premium which has to be paid to the government. It's basically government guarantee given by the government. It carries at 0.40% or something, depending on the industry, depending on the size of the loan. That cost is there. If any entrepreneur is so conscious about the cost and have the security available with them, then they can offer, and the bank may not go with the collateral guarantee. It's not mandatory for that purpose, but nobody will be deprived. I will give one figure. The increase in the percentage of loans sanctioned by a bank, if I take the last 10 months data of State Bank, being the major lender, at the industrial level also, across the bank level also, it is definitely improved. But sir, if I have the Delhi circle data, which used to be something around 20%, has gone to 65%. So you can assume the loans given to MSME, out of which without collateral, for us the CGTMSE itself is collateral, that has improved from to 65%. That is the data of these 4 states which I was heading. So there is a tremendous shift, and I urge that at time the conception or the misconception, or at the time we carry that the lenders will not be very keen on funding and all, will definitely slowly go. And at the same time, we also educate the entrepreneurs that the early we remain into the formal economy, we route our transaction to bank accounts, that is on a longer run will definitely help us. This is what I just wanted to give you from the lender's point of view, and the shift in the financing pattern for MSME. Thank you, sir. Thank you.
Thank you, Mr. Sharma, for sharing your very deep experience, very rich experience of more than 2 decades from a lender's perspective, and how funding can benefit the MSME sector. We are very grateful to you, and I am sure that this would be of much use to our audience here also, to understand how funding happens. And from the panel's point of view, you had mentioned that in the funding operations, you make use of AI, machine learning, and so on. And earlier in the discussion today, Mr. Bhardwaj had also pointed out that technology is a challenge that is being faced by the MSME sector. So technology, as you know, right now we have the AI Impact Summit underway. We are sitting here and we can also try to replicate what's happening in the summit and talk about technology issues which are very important. How would AI impact the MSME sector? So I address my next question to our distinguished alumnus, Mr. Deepak Pathak. I welcome you warmly as an alumnus of Delhi School of Economics. So Mr. Pathak is lead data scientist from IDFC First Bank. My question to you is that if an MSME wants to start its technology journey, so what should it prioritize? How should it do this? And can AI help to improve productivity for small manufacturing units? And also if you can comment on what role would industry collaboration play in accelerating technology adoption among MSMEs?
Thank you so much, ma'am. Thank you so much, Professor Ram, and the stalwarts present around. It feels great to be back in the alma mater where you are. Whenever I'm here strolling around in Delhi, and if I happen to be in the campus, I never really feel like I'm an alumni. I always feel that I'm a student, and it's that same mindset comes through because no matter where, in which part of the building you are, whether it be in Ratan Tata Library or whether it be in the auditorium or at CDE or just sneaking into one of the classes that I've been doing for quite some time in the past few years when I'm in Delhi, it always makes you feel that yes, this is the place which always gives you a lot and makes you learn a lot. And hence, really, really thank you, and it's an honor to be here again all the time, to be able to give back in whatever way and possible to my institute. Coming to coming to the questions, ma'am, I mean, one of the finest thing which I really found out was the way our panel walked through. I mean, we started off with the challenges. We went to the government section, and definitely we went to the lending. Now, the cherry on the top is the AI stack, the elephant in the room that everyone talks about, artificial intelligence or machine learning, data science or decision science, which actually plays a very crucial role and has been a lot of thirst even being given by the government, not only for educational purposes, but also for the boosting of productivity in the economy. The very question whether MSMEs, how do MSMEs or maybe small firms start off with their productivity journey or digital AI journey? Second, how do we see that is there a possibility of AI harnessing or increasing or enhance the productivity segment for the MSMEs? And third, which I would personally want to address eventually, is onto the aspects where maybe the government even can play on here. So my experience with the MSMEs have been in terms of lending, in terms of assisting them through their credit journeys. And most importantly, one of the issues that I've found out is that the idea of AI is not untouched by them. They're not unaware. They're definitely aware. They know how GPT exists. They use it for their day-to-day queries. But the problem that comes up is the adoption. The very idea of digitization is something wherein the micro and small enterprises struggles specifically. And why? Because it's not always about the idea that you know, but whether it is approachable to you or not. Say, for example, a small unit which is manufacturing maybe scissors, or for that sake, slippers, or leather garments, or textile units, not the bigger ones. But these units, they always have this question, how do I go into that stream of AI wherein my workload is reduced, my efficiency in terms of stocks increases, my inventory mismanagement goes down, and the errors goes down? The answer to this is start slow, start small. You have to, before we take the big leap, you need to start walking. And that is when you start with the basic digitization. You move away from traditional ways of doing business, which is definitely convenient. The ledger writing, the book writing, the association of noting down every single thing in books. You need to move from there to the aspect of Excel. I mean, it might seem very preliminary, but trust me, my experiences with the SMEs have been that they are still in this conventional mode of business doing. Now you move to Excels. Excels themselves are capable of doing predictive modeling. Excels themselves are capable of, when I say predictive modeling, that is Excels can help you with the past data that you have, ascertain what is the inventory gap that you can actually foresee in the coming few months. They can help you manage your own workforce, which is very critical. At times, when we have peak demand and low demand, we know it because it's on our heuristics. It's there something which has come from the experience. But do we have any specific statistical data backing it? One thing is wisdom. Second is statistics. You combine the two, that becomes the real power. And that is wherein we know that simple tools like creating a dashboard, which is able to regularize the presence and the absence of your workflow, can help you manage for those unforeseen circumstances wherein you have a peak demand and a labor shortage. Especially for the months, say for example, the shopping months, Diwali, or for that sake, festive months, Holi, or end of the year sales. These are the places where these the small industries usually seem to be backing off. Because these things can easily be done in terms of sophisticated, very, very sophisticated tech stack built by Google, AWS for enterprises which are over 500 crores, or for that sake, around 300, 400 crores. For them, it's affordable. But for not someone who is in the bracket of 100 crore or a 50 crore, their margins are thin. At 6%, 7% EBITDA, or even less than that of a PAT, they are working at a very thin margin. Do they have the ability to be able to scale themselves up? Yes. But can they go for those costs which are being incurred right now because of high tech stack? No. So start with basics. Digitize your ledger, digitize your order processing using, wonderfully WhatsApp business has been able to do it using that, Zoho or CRMs. And these stacks can actually help you create data which can then eventually be used for analytical purposes. So there are frictions, of course. There are frictions in terms of the workforce. People say, now when I say start using Excel or maybe move out from just using normal ledgers to Excel or to advanced sheets, there's always a workforce hesitation. Because people who are working in the industry for so long, they need to adapt to such technologies, as well as the upcoming workforce, the students, the graduates from institutes of maybe ITI, Industrial Training Institutes, or doing Bachelor of Commerce. They need to upgrade themselves too, so that they can fit into this particular sphere of the workforce. And that is where one of the biggest elephant in the room is always addressed. Can AI take up those jobs? I'll say no. I sincerely believe, because over the past few years, I've been doing these automation processes. I've been assisting SMEs with the help of the bank to do these automation processes. Actually, it has enabled the workforce to increase the amount of work that they can do in hours. An individual who was taking 8 hours to get a sense of the entire sales that has happened can do that within 3 hours. Imagine the rest 5 hours that you have left with. You have that time to brainstorm on the ideas, to increase your, of course, the range of activities, probably invest more into the business development, probably invest more into the marketing aspects. And these are the people, these youngsters that I have had the privilege to talk to, they feel motivated by it. Because now they have a bigger share in the business. Not in terms of the equities, but in the terms of their impact that they are generating. And this comes from simple automations, very, very plain, vanilla, simple automations. Then let's talk about the issue of data that these automation helps. I think SMEs today, like I said, they're aware of the tech stack, they're aware of that there exists AI, but the problem is the fragmented data that exists. A single firm in a cluster, the Merit cluster, which was mentioned recently, over there, a single unit, if it produces scissors, it may not have enough data to be able to give you a prediction forecasting for a global scale or for the cluster scale. But what if I bring out all the 13, 14 firms which are there, use their machine inventory performances, or for that sake, the breakdown of their machinery, or for that sake, the total number of sales that is happening in an completely encrypted or anomalized form. That is, no one knows who is contributing what data it is. Then even if one firm is producing 1,000 units in a day, for 13 firms it's 13,000 units in a day, which gives me a sense of the total production capacity that can exist in a cluster. Plus the challenges that they are facing in terms of order, pent-up order, low demand, or if there is a breakdown, a machinery breakdown. Now all of these things can actually work as an aggregate data source for any advanced AI ML machine learning to work, which can be utilized by the clusters. Now, like I said, for one unit, it's not economical, but for cluster, it's economical. And this insight can go back as a loop to the individual units who can then plan their specifics and be able to deliver more. Another aspect which I was really keen on seeing, it was discussed, is with regard to the trades platform. I've had the privilege to look up to the data that it provides you with, the lending parameters it provides you with. The alternate, I would say, information that you get apart from the total turnover of a company, the total stocks of a company, the inventory of a company, but the volume at which the trades keep on running. The number of times you can churn out your finance to procure more goods and to be able to supply more orders, that becomes a leading indicator of the performance of that specific unit. Now these small items have often been overlooked, and hence no matter how much we try, we actually have that big gap of big time funding miss. That is, I wouldn't quote it because it's always in 100 billions when they say that MSME sector lacks funding miss, or for that sake, their productivity enhancement when we say we are not competitive enough with the industries in Vietnam, with the industries in Bangladesh because they have cost benefits. Then that is this particular data management, which is the most fundamental and the starting step, helps you achieve. Coming to that one particular point again about the workforce. So this is something which I had a chance to even pitch somewhere long time back, and it came from our economics classes, the Hirschman theory of growth, which says that there is forward and backward linkages. Now imagine a situation wherein you are increasing the productivity of an individual who is working in a unit. It actually helps that unit become competitive. If a unit becomes competitive, it actually creates more demand for the units which are subuniting, or maybe I should say providing goods to that unit, as well as this unit providing it to a larger unit. Now Foxconn, or for that sake Boston Analytics or Boston Engineering that comes into our country, would look for such productivity measures. It makes us globally competitive. And these roles cannot be done without having proper data, without being able to harness the power of data using an AI stack, and without having a vision on how to use it. Now the vision part is where the government comes into play. How can government help you leverage this? Government need not subsidize things. That's my personal foundation, because over here we need government to be an enabler. You need to facilitate, like the cluster program which I mentioned. You have to facilitate such developments. You have to help ensure that the data trusts that are existing, these data trusts wherein individual anomalized data goes into decision making, is secure. It does not leak. The infrastructure for which can be provided by the government. There is an amazing PETC, Precision Engineering and Technology Center, opened up in Chennai. It's a 70-30 ratio between state of Tamil Nadu and the private MSME segments, wherein the MSME segments, they sort of give the best and the worst cases which they face as data incentives, and the government facilitates with their infrastructure that they have been able to build. And this has helped them actually go for a precision engineering, which is a very high skilled and a high level mechanized sector, to deploy rightful resources with the right tech stack, with the right advancement, and most importantly, reduce the chances of errors, making them again competitive in the market. So my sense of the idea of AI coming into this small and medium enterprises is something which is very much a game-changing system. It's just that we need to adopt, we need to reduce frictions, we need to get more organized. And organization comes with practice, and that is something which seems to be a long way sometimes, because the interaction always keeps people a bit hesitant. So on and all, if I have to summarize, yes, AI is capable of harnessing power, increasing productivity, engaging workforce, the human in the loop, artificial intelligence and machine learning technologies, which I mentioned, which can actually help in boosting productivity, increase the scope of work that can be done by an individual, enhance the data points that can be used or leveraged by the lending big banks in order to assess the performances, reduce the credit cap, eventually catalyzing the growth and the employment in the country. That's all. Thank you.
Thank you very much, Deepak. Just one more point. What about industry collaboration? Do you think that would help?
Yeah, so really sorry, ma'am. Industry collaboration, yeah. So one of the recent examples that I have seen was with the ITC. Now, ITC has this amazing initiative that they took with regard to the packaging. Packaging should be sustainable. ITC at front end says that all their packagings that they do are sustainable because they're environment friendly. How have they been able to do this? Because at the back end, all the corrugations and packaging industries in Mysore that I know of, the ones which are linked to ITC, they get direct inputs on how do they ensure that their packaging is sustainable, how and what technology do they use so that there is minimal waste reduction, how and what technologies do they use so that there is less chances of error rates, the quality of failures. This thing can come only if the larger ones, the larger corporations look back with their own backward linkage chain and ensure that they can pass on the power of tech that they possess, without which it's not possible. A lot of heavy R&D is something which can be done by big industries. These R&Ds need to be pushed back. So the industry collaboration from the point of view of two large industries is very much required for the small MSMEs to go ahead. Also, if I have to think about the academia and industry collaboration, that is very quintessential. So IIT Bombay, in one of their IDCs, that is Institution of Design, Institution of Design and Innovation Thinking, what they do is they collaborate with the MSMEs and try to figure out the problem statements that they are featuring, build prototypes around it. And these prototypes could be as simple as using pen, paper and clay to be able to understand how the problem looks like. Then what they do, the last incident which I got to know of was that they helped build very cost-effective sensors. These sensors which can be utilized for the machines to be able to assess the heat, to be able to assess the sort of, the oil and gas friction that comes up. Now, this was very much critical for the foundries which are there in Kolhapur, who are facing issues with respect to breakdown. So the industry collaboration with academia and industry to industry collaboration on the forward side, both are very critical for MSMEs to do, because they do lack funds to invest in R&D. And academia and larger industries are the places where the real R&D can actually pass on, because it has eventual benefits across for both upwards and downwards. More employment can be generated, as well as the quality that we can provide, the MSMEs can provide, is going to be something which will be world standard. I hope that was something which was clearing enough.
Well, thank you again, Deepak, for your invaluable suggestions on the use of technology for increasing the competitiveness of the MSME sector. Technology can be seen as the icing on the cake, but can make a world of difference to the performance of the sector, and therefore we are grateful to you. And I also think that maybe the research development and innovation scheme can contribute towards this initiative. So thank you all for all your expert suggestions, expert inputs, expert insights. And before I open the floor for questions, I would like to ask our distinguished panelists if they have any questions for each other.
We have questions from the audience.
Well, I think they all seem satisfied. They're all experts in their fields and appreciative of each other's efforts. So now I would like to open the floor to the students especially. And what I'm going to do is I'm going to request Professor Ram Singh and members of the organizing committee to take the Q&A session forward. It is their vision to hold the DSE Young Scholars Seminar. This is the third such seminar being held. So they know exactly what they expect and what they want from you as students and other members in the audience. So I think, yeah. So Professor Ram Singh can take this forward from here.
Thank you. This has been a very fascinating panel, perfect complementarities that you brought together to the issue of MSMEs, growth and employment, and several other dimensions. This kind of complementarities are very difficult to achieve, but Professor Dua has achieved together with panelists. So we are going to take questions from students and from professors and researchers. But before we start taking the questions, I just want to take a minute to say few words about Deepak. He is, all of you know that he is your senior for students present here. Very few, you can look at him very young, only a few years senior. And he has already made substantial contribution to our institution, your institution. The nice labs that you enjoy in CDE, computer labs, and 70 scholarships, means-based scholarships, 7,000 per month for 2 years, MA students, means-based students who come from economically disadvantaged backgrounds. These major accomplishments have been possible because of Deepak. So in a sense, he is an epitome of what we look for, what we prepare our students for. So there are more of you. There are more Deepaks here, this side of the hall. So with these words, I open. Now I start inviting questions. You can identify yourself, but more importantly, keep your questions clear. And if you would like, you can keep your question general so that whoever wants to answer among the panelists, they can. Or if you have pointed question to a specific panelist, you can do that. If you need few minutes to think of questions, then I can start asking them questions. Sandeep, we will start with you. Yeah.
Hello. Thank you. It's a very fascinating panel discussion. My question for Mr. Tapan Sharma and for Deepak, because both are bankers side. So you all, both of you emphasized the young entrepreneurs, the potential entrepreneur from these young students. So how, as a banker, how you are thinking to educate, because we are still in old school style thought process. Okay, let's have a job and secure your life. Let's not take any risky job like opening up, going for any startup or something. So do they have any kind of, the student, do they have any sort of framework or benchmark to think this is how we need to reach, and these are the background work we need to do in order to approach a particular type of business ideas, right? So how SBI is kind of tackling this sort of business, because I'm pretty sure many of them will be sitting for the placement, very few of them will be kind of thinking, okay, I should go for kind of setting up my own businesses, right? So how the banks are thinking, how to educate our next generation entrepreneurs? Thank you.
We can take some 2-3 questions together and then yes, you.
I'm a scholar, PhD scholar from Punjab School of Economics. Sir, my question is particularly to Anil, sir. As we have seen that during this panel discussion also, we have understood that government has taken a lot of financial reforms for MSMEs. And we have seen that these reforms have also reached to particular MSMEs. But what the major challenge I have seen or during the interaction with these MSMEs is that we have seen that these MSMEs are producing something, but where they are actually lagging is not finance particularly, but how they are implementing technology in their production processes. What we have seen is that they couldn't become globally competitive because somehow they are not integrating technology in their production process. So how can we, how can we take that challenge, or what, as a government or as a ecosystem, what can we do to, tackle these challenge which MSMEs are facing? Because we have seen that most of the times their products couldn't become very globally competitive, or they are highly priced in the market because either they have not properly implemented
I think
technology
you
in
have
their
conveyed
production
the
process.
gist of your question very clearly. Yes, thank you.
I believe larger inefficiency of MSME comes from inefficiency in scale, that firms are not operating at the optimum level, and due to lack of technology. So I saw an interesting thing for the agriculture. So where APOs, like farmer producer organization, are working under a single umbrella of KVK or state university. So, and they are getting the opportunity for vertical as well as the horizontal integrations. So is there any single umbrella for MSME also at the districts or at the subdivisional level where they can exchange their ideas or technologies? And another questions for the lending side. So getting loan is too much easy nowadays. So even without collateral. So did you find any pattern of elite capture or political capture in the lending? If the answer is yes, how you are tackling that that type of issues? Thank you.
Should we? Okay, so we will take one more question from that side. Let's go to the back of this column. We will come to you in the next round.
Hello, my name is Atri. I'm a student at Delhi School of Economics. I'm pursuing my master's from here. My question is for Mr. Anil Bhardwaj. So you mentioned about how MSMEs are facing significant roadblocks due to inefficiencies of municipal corporations and municipalities. So how would a decentralized government structure help in mitigating these roadblocks and aiding the growth process of MSMEs?
Okay, so let us stop the first round here, so that you have now opportunity to respond to the questions. Chair, yes, you can start. Yes, please.
Yeah, so there were a couple of questions specifically from the lending point of view. The first one was more about entrepreneurship, means how can I become an entrepreneur? Then comes the lending part, which you were discussing. Obviously, as a lender, as a bank, we have certain setups where we give inputs to the entrepreneur who is looking for starting any business and activity. Per se, if we ask, any entrepreneurship which comes in the society we move around, any idea, it may not be the manufacturing one, because having some background of a startup, dealing with the startups, with young people like you, which I have been interacting in the last 3 years very closely. There are multiple agencies which gives you the entrepreneurship development programs are there, like there are NSIC, National Skill Development and all that. But beyond that, there are many which I have experienced. They were into some of the industry, or they were into some of the organization, or started something in the beginning along with few of their colleagues, seniors and all that. got some understanding of how the business flows, either from the background of their friends, relative, or maybe the family background, or the fresh entrepreneur who is coming up purely a fresh background, had some inclination towards any of the industry which we felt that okay, I can do this. Means there are multiple names which unicorns and all the we see. Something I was just telling, I can quote you without naming someone. One of the co-founder is Chayos. I mean, see, few days ago we met him and we gave. Then after that he came out and all that wife was also working. They felt something came in their idea that how I can correlate my when she started looking, the society is becoming more and more health conscious or very natural friendly, organic and all that. They started some startup. They came with a concept, started with a small level, studied it well, studied the how the business is done through the similar existing businesses in the same line of activity, understood their model, and then came out started with a small first step towards that. As a lending, as a business, then there are entrepreneur development programs are available from the government side also, because they like MSME industry also has. Then within the MSME industry, even the Mukesh Mohan Gupta ji can tell, there are multiple organizations which we also collaborate as a lender. When what happens, they provide the skill side of business model side of thing, and the banks come with them from the technical side and the finance side. If there was a concept of entrepreneurship development program, EDP, where as a bank we also participate. It is available in the major centers where in the collaboration with NSI something. But primarily the business starting has to be identified, or I would believe that has to come. Nobody can come and tell that you start this business. It has to come from inside. This service I can provide. I feel that okay, this can make sense. It makes some sense. There can be multiple reasons, multiple your own thoughts, your own belief, your own experiences, your own inclination rather, I would say, because ultimately the business also has some passion to start with it. So, but once you start that, there are multiple layers, agencies and all that you can approach, or they can come forward to help you. Startup, if I say startup, we keep on engaging some sessions. We call the industry. Suppose you find out that okay, I want to go towards the renewable energy, or for example, now the buzzword is of electric vehicles, batteries, and all that, because we are moving towards this. So therefore, there we conduct some sessions. Okay, we collaborate. We can invite someone who can guide you about this industry, how the dynamics of the industry, what are the margins, how the raw material is being procured, which is the product segment, who are the buyers, what is the size of the market, if we start. So this sort of thing can happen. Startup is one step toward this. As a bank, sir, startup, we collaborated with the incubation centers of the IIT Delhi, IIT Roorkee and Lucknow. So they have the incubation centers. Whatever ideas you are coming up, if it is a new idea which can be scalable, then there is a lot of facilities available to share, and they create the modeling also, how the costing will go, how the entire business will flow. So this is a very sort of thing I will still go, sir, that it's a very individualistic, but there are opportunities and support available from various sides, from the private as well as the government side also. A lot of institutions are available. So the second question was also you wanted something about lending. I just
political capture in the lending? If yes, how are you tackling these issues?
As such, I would not say that there is influence. I have not come across much. But one thing, to address all these issues, ultimately what happens, any business, any risk is very subjective. Someone may find I am very confident. The entrepreneur may say that I am very confident this business has a margin. The other person who is a lender, or any other person for that matter, will have his own experiences, own subjectivity involved into that. And that used to be the reason why the credit group used to. The credit officer will think, okay, no, but I find it, you prove for 5 years, then I will see, I am not very sure, there are a lot of risk, global this, that and all that. So lending is more and less moving from this aspect to become more and more objective. And as Deepak had shared that the modeling, use of artificial intelligence, use of your past pattern and all that, it is coming and making the lending, at least for the MSME, more objective, which I discussed about BRE. And that insulates from any sort of discretionary decision making by the particular credit officer, because ultimately it's an assessment. And it can never be 100% sure that no business is going to remain always on the same lines. There will always be a downturn and all that. And that's how we adapt, we change, we keep on evolving. The lending methods as well as the business or entrepreneur also keeps changing is this. But by and large, I don't think there is a much of it. It's a purely objective. And within the internal lending system also, the risk models are also very objective. It is at times shared with the unit or the borrower itself. This is how we carry out the financial risk model. This is how we carry out the business risk, industry risk, management risk, and this is how we come out to our own assessment that whether it is credit worthy or not. Thank you.
Just to add on one small point, one line. In fact, all of these models that are built and objective, they are heavily regulated. Heavily regulated. Everything goes to RBI at the end of a quarter and the year. So the objectivity is sincerely regulated, and it's very difficult to pass on discretionary sentiments over there.
Just to add, in fact, to your question, there are various portals. You can go to startupindia.gov.in. You will find a lot of courses over there. But as far as your comments is there, that most of the students currently need a secured future. They want to become, sometime I used to say that most of the students nowadays, you want to become a manager. But very few will be those who will start their entrepreneurs. और जो start करेंगे भैया बाकी लोग उन्हीं की यहाँ नौकरी करेंगे. So this is the beauty of the entrepreneurs. As far as your question is related to political interference, nowadays sanction either is on a digital footprint basis, and the digital footprints are, as he rightly told, the GST, the bank statement, income tax return, your past behavior. You need not to worry for the political interference. Political interference इतना ही है. All the sanctions are in a digital way, or for some bigger loan, it is a committee approach nowadays. So no individual can take a decision for sanctioning or rejection of any loan. My one suggestion will be, if you really want to become an entrepreneur, be focused, hardworking. There is no other option of the hardworking, and you need to be very, very ethical also. When you tell that taking a loan is very easy nowadays, it's such a thing. I suppose it should be, it should go viral among the MSME, because whenever we discuss with the MSME, they raise a question that taking a loan is very, very difficult. I am happy to listen this in Delhi School of Economics, that you have an idea that taking a loan is very easy. But compliance and ethics are very important. Just one thing I would like to tell you, that most of the people and even the professionals or the MSMEs are not aware about the definition of default. The definition of default is 1 rupee 1 day. If any enterprise or anybody defaults single rupee for a single day, it will be very, very difficult for him or her to take any additional loan.
Mr. Bhardwaj, please.
So, living up to your expectations, quite insightful questions have come from you. Couple of them I respond to. One is with regards to scale and technology. So you are absolutely right. When it comes to the total segment of MSMEs, so 99% are micro enterprises, 1% are small enterprises, and medium enterprise number is so low that it comes in a 0.0 something percentage. In my reckoning, the number is not more than 15 to 20,000 in the entire country of 140 crore people. Why? So we have couple of perverse incentives in the system which incentivize people to stay small, micro, informal. And it is primarily because of lack of reforms. One area, couple of areas I'll identify because time is limited. One is labor laws. Now in labor laws, what happens is the moment you cross 10 people, that's why you have just 2.5 lakh companies as registered as factories. Because the moment you cross that limit, the ESI and Provident Fund, once you cross 20, they come into picture, and then the salary plus cost of the social security comes to the tune of 40 to 50%, because that includes ESI, Provident Fund, gratuity, bonus, etc. And then dealing with inspectors and compliance burden, etc., etc. So one way of doing away with all this is that you stay low, so low that either you become undetected or remain, or you employ people off the register. In either case, your scale becomes very, very low. Now, if your scale is low, but you need to deploy technology, that means you'll have to raise funds, and in order to raise funds, you go to the financial institution, and then they would like to see where from you are operating. And then it is connected to the question of municipalities and the way cities are governed in India. These are interrelated questions. For example, see, in 1950s, till 1950s, we did not have municipalities in the country, and we did not have, not the municipalities, but urban planning, the way we have master plans. So in 1950s, a bunch of experts from Ford Foundation landed in India, and the way they used to plan cities in US, they juxtapose it in India. Now, India and US were different. In US, the cities grew just, recently. But we have cities which may be 2,000-year-old. You have Varanasi, 2,000-year-old city, or maybe more. Several of such cities, as a matter of fact, more than 500 clusters are such, which are more than 300, 400-year-old. Now here comes a bunch of these people with their master plan, and they juxtapose in the living city, where there have been markets, there have been bazaars, people have been operating from home, producing goods. If you go to Aligarh, 90% of manufacturing is in the household. You go to Saharanpur, woodworking is in the household. You go to Kashmir, everywhere in the country, it has been like that. But suddenly, the moment master plan is juxtaposed, all these activities become, quote unquote, illegal, because non-conforming area. Because as per the law, as per new law, they had to be some specified place, industrial area earmarked or a commercial area earmarked, where you were supposed to operate, but they have been operating from home. And they perhaps would not afford the new industrial area that you have created maybe 50 or 100 kilometers away from the city, which was unviable. The similar thing happened in Aligarh or Moradabad. People have been operating from Moradabad, in the city. You created industrial area that was several kilometers away, and it was not possible for families to migrate to that particular industrial area. So, to cut the matter short, almost 70 to 80% of MSMEs that we have in number, like 74 million, 75 million, operate from areas which are non-conforming by the bank's definition of conforming area, or municipality conforming area, or the Department of Pollution. So all these clearances you would not get. Once you don't get the clearances, you would not be able to raise funds. Because you are not able to raise funds, you are not able to scale up. If you are not able to scale up, you can't have technology, and because you can't have technology, you find it very difficult to compete. This is a vicious cycle in which we operate. So this is the background. That's why when it comes to municipality, it is very important that municipalities are capacitated, are properly funded. They should be able to raise funds. Currently, the situation is so bad that almost 70 to 80% of the municipalities have not been auditing their balance sheets for decades. So everything has been on very temporary basis. Somehow for the year, everything is very ad hoc. And in order to raise funds, for example, hardly a dozen or so municipalities in India or local urban bodies have been able to raise bonds, because you would not be able to issue bonds unless you are auditing your balance sheet. So that's the first requirement. Important thing what has happened is, and that gives you some hope, 3 documents in recent times gives us hope. One is the Finance Commission report. The Finance Commission report for the first time earmarks almost 4 lakh crore rupees exclusively for urban land bodies or municipalities. And with a caveat, number one, that you would be auditing your balance sheet. Two, you would be putting these balance sheet on the public domain so that people like you or maybe in can say civil society, they are able to see where are you spending, how much money is being spent, and some kind of transparency it will be able to build. And you have the funds, so you will be able to hire people who can manage cities. Currently, situation is so bad that, you know, the chief of the person who is heading the municipality is actually a doctor. Because there was, in Angrejo ke zamane mein, there was some plagues sometimes. So doctor was made as the chief. So the chief is continues as doctor. Now cities are economic drivers. They are creating jobs. They are creating quality of life for people. You need spaces for entertainment. You need security. You need transport facilities. And I mean, so you require a very different kind of skill set in order to manage cities. I think it is there in the Finance Commission. It is there in the economic survey. See, this year's economic survey, if you, some of them you have read, one full chapter is on tier 2, tier 3 cities and how they can play a very important role in economic growth of the nation. Third is the announcement in the budget. So I think there is a sync between the budget, Finance Commission report, as well as the economic survey report. I hope that with this we will be able to address this question of scale also, and also quality of life in the cities. Now, just quick comment on the elite capture. There are two things that I would like to mention here. One is that before insolvency and bankruptcy code, there definitely was elite capture. So the large companies would come and get the bulk of the funds, and then they will use or misuse the funds, and then they will file the company or to BIFR and continue to enjoy the funds. This has been the template from 1970s to almost 2000 or so, or 2000 maybe 14. After IBC, this changed. Suddenly you see, if you are not really performing, the company will be you created, and that would be acquired and sold off, and you would not be owning the company anymore. So that has sent a chilling message to the large corporates in India, and they have fallen in line. They are not raising funds now from the banks anymore. Maximum the funds they are raising is from external commercial borrowings, ECBs, or by issuing bonds, or by raising funds through the bourses. So the elite capture, so far as in the tradition in India, is not there. But the second elite capture is there, and that is by the government. That continues. That means if you are not meeting the budget, if you are having the issue of deficit financing, how much money you raise it through the banks, because banks remain under your control. So by giving a good yield to the bonds, you basically try to capture most of the funds that are in the banks and then are deployed for all the reasons which are not economically right reasons, like, you know, maybe buying votes, as you know, there's Revadi and all that, you know, the political, you can say, initiatives that are there, not only just in the center but as well as the states. So that capture continues, but that is under question too. I think that's my answer.
So, I think the responses session has been even more provocative than the first round that was there. So we will go for the second round, but I'm tempted to make some comments and ask questions. Sri Anil Bhardwaj has given us a lot of, has talked about what we describe as a macro issues, a relationship between municipality finance, their fiscal health, and the competitiveness of MSMEs, why Indian enterprises remain small. My question from that macro point of view is that that Anil, these constraints, land use regulations, lack of power or potable water, they affect manufacturing and services and trading units, but alike, more or less. Though there are some regulations that bite manufacturing more than trading and services. But our GDP shares of different sectors, manufacturing has not picked up. If anything, it has gone down. So it might have something to do with our policy on the export front, export-import front also. A point that you made early on in your first round is that while manufacturing products are tradable internationally, many services are not. So to the limited extent we have exposure through exports and imports, it affects manufacturing more than services. So our GDP share, services sector increase in GDP shares is not something that we should be singing praises about. It is a manifestation of different kind of cholesterol, regulatory cholesterol or obsession that we have to keep our enterprises small. So my question, which you can respond later, is that what would be your approach on export-import front? Would you be more protectionist, or there's a case for increasing? One way to make our units competitive is to unleash this cleanse of our veins of this regulatory cholesterol. Other would be to increase external competition. There are two ways, and of course one without the other can kill. So, but that's the question. It would be great if you answer.
Would you like to respond
later, please? My question to the two bankers here is that from microeconomics point of view, you are dealing with a situation we describe as asymmetric information. You are in business of lending. You want to lend to as many clients as possible, but of course at the same time you minimize the risk. Now, given your objective, it is in your interest, bank's interest, to reduce informational asymmetry. Mukesh Mohanji talked about that, and you also mentioned that now you are increasing digital collateral more and more. But the point that comes from Deepak's conversation is that there is a case for doing these assessments, risk assessments using AI and data that can be generated at cluster level, is that you undertake these interventions at cluster level. So are banks putting their human resources, their money to address this issue, basically to generate digital collaterals, not only at individual unit enterprise level, but at cluster level, because budget has focused on providing infrastructure for green transition at cluster level. So Deepak's point is very nice point, that there's a case to be made for providing AI or big data analytics driven infrastructure at cluster level. So later on, if you would like, you can answer this question, what banks are doing to address this question. And Mukesh ji, to you, my question is that you run a scheme which is unique, MSME Mitra. And therefore, we expect you to know what kind of skill shortages bite the most, is the greatest hindrance in development, growth, scaling up of MSMEs. So please throw some lights on this. I have asked my question, I have used this privilege, but I'm going to open the floor again, and we will have one more round. My comments are optional for you to take up or not respond. Pami, is that?
Yeah, I think we have time only for one question.
We have time. We can take one round, and then we can wind up.
All right.
Yes.
Okay, thanks.
Yes, so we had that's right. Yeah.
Good afternoon, everyone. So my first question is directed to you, Mr. Sharma. So you mentioned about two risk models where you kind of substitute for a collateral, where you get the data history related to income tax and all, you assess the risk of that customer. So I feel that it might lead to something called you're doing what you can't, you're doing indirectly what you're not doing directly. For example, it might essentially lead to those same barriers that barriers are induced by collateral based lending. And further, I have one more question. Is there any, I mean, this leads me to data privacy concern. Is there any framework that deals with how do you utilize such sensitive information? And I have one more question. So
Just one is enough. The second one you can take up over the lunch. I will request them to stay around. Yes.
thank you.
Here, let's bring questions.
Good afternoon. So my question would be upon the topic of data again. So Deepak talked about the need for consolidation of the data because again it's very fragmented. So for any analytical purposes. Now even for productivity analysis and everything else we would need data from different firms. But the incentive for them to disclose those data despite the requirement for the government to play as an enabler there would be much less. So is there a solution for this or
Very good.
again this would also create like a compliance
I think
issue?
we got the gist of your question. Is that we can take one. Okay, so one question here. Can we take this 3 questions? You can, or all right. So we will take this. Let this be last question. Chair has announced that this is the. So, but other 2, I will secure your opportunity to ask them questions. So.
Firstly, thank you for the session. My question is to Mr. Deepak. As you mentioned about the cluster program, it's all about aggregation of data and trying to analyze things later on. I mean after that. So I'm just so curious to know if there's any instance where we can fall into the fallacy of composition, wherein as a cluster we see impressive results, but for a unit in the cluster we may see the system to be stagnant. So we're back to square one. We cannot essentially know if all the units in the clusters are improving equally. So how can we overcome that?
All right. So you may take a minute or 2 to respond. Yes. Yes. Up to 2 minutes, please. Pami, is that?
Okay. So, Professor Ram, you are spot on actually. So the impact of trade policy on competitiveness is very straightforward. And if we see from the perspective of exports that our backward integration has been coming down over the years, and that's why it is blunting our export edge. So it's very clear, and it I think is demonstrable by data. Now look at, for example, the kind of tariff plus duties that we are adding on our major imports, whether it is steel, whether it is copper, aluminium, plastic raw material like polymer, glass. All these are building blocks for industry and the downstream industry like MSMEs. It's major raw material for them. But if you have, first of all, high rate of duty, chalo, that's okay. Then anti-dumping duties, then safeguard duties, then floor prices. Suddenly you are making import of all these major raw materials almost impossible to import, number one. And if at all it is imported, the cost or lending cost is becoming 10 to 40% higher than the prevailing international prices. Now in such a situation, if you are manufacturing for exports, it becomes very difficult to compete with the economies which have absolutely open trade policy. So I'm talking about Vietnam, I'm talking about Indonesia, I'm talking about Thailand, I'm talking about Singapore, Vietnam. So all these competing economies, particularly in engineering items, textile and garments, we see that we find it very difficult to compete. Textile, for example. Now, in textile, almost in India, almost a majority of what we are exporting is cotton-based. Now, cotton prices, are, as you know, in India are politically determined. because of the host of reasons, farmers are involved, there are instances that, people have committed suicide for whatever reasons, but ultimately it is politically determined. It is not internationally driven. Whereas the buyer are setting their prices on the international prevailing prices. So one major problem we have, but another big problem is that world is consuming almost 60 to 70% of garments which are not produced of cotton but man-made fiber. Man-made fiber, it is impossible to import the raw material of man-made fiber or man-made fiber itself because of the custom duty and the prevailing prices. So I think it is very clear to me that if we want our export sector to be competitive and expand, then it is necessary that we have an open trade policy. The idea of having QCOs on all kind of products and raw material is, self-defeating, in my opinion. Now you ask the question whether there is a case for protection. I think there is a case of protection in every country. So, but it has to be an exception, not the rule. And you have to have greater reasons, very specific reasons why you want particular sector to be protected. And that has to be an exception, as I said. But unfortunately, what is becoming through the QCO is that majority of the items we have started putting under QCO, quality control orders, I hope that many of you are aware, under which, it's a kind of old world licensing. So you require a license, you have to get your import registered in a particular authority in BIS, which is making very, very difficult, not only the product, but the manufacturer of the raw material also of that product actually needed to be sort of registered. It is becoming impossible. So in a nutshell, my answer is very simple. So far as MSMEs are concerned, it is in the interest of the nation also that we have an open trade policy.
Deepak, do you? Yes.
So,
One and a half minutes.
Yeah, 1.5 minutes. I'll try to keep it really, really short. I think the last two questions is the one which I'll pick up first. First is the incentive to provide data at cluster can have negative consequences. Negative incentive in fact. And the fine-tuning aspect, which is all units are improving equally or not the composition. So maybe with one single example, I'll be able to kill both the birds. First is, just take for an example, in Indian scenario, in clusters, if you have manufacturing units, unlike what happens in US, where there's a very scientific placement of machinery, so we do it a lot of times basis Vastu, basis the amount of land I have. Now think about it, okay, just think about it. Imagine you are walking into a factory, you have 10 units, and the adjacent factory also has 10 units. Both are equally operatable in the same set of environment, okay? Both when are equally operatable in the same set of environment, you may still have local differences. That is, do I have an AC in my unit? Do I have a proper vent? Do I have a proper wastage, which impacts my machinery, but may not impact the machinery at the adjacent site. So now when I am actually collating the data and trying to make a global model over there, I can actually fine tune it locally as well. So while I'll be able to predict the breakdown of a machinery using the two situations which are adjacent to each other, I do have the flexibility to be able to tune it to my AC system, my venting system, my own say wastage mechanism system, my own units of electricity and whatever. So while at a global level that model would definitely fit for my cluster, I have the flexibility to fine tune it locally and see whether it is actually helping me or not. That's the answer to you. Now coming, why would these two units share data at a cluster level? Because this may increase the competitiveness amongst them. Yes, definitely it will. But what is still left with you as a business? You still have the innovation at your end. You still have the ability to influence the market at your end. You still have the ability to design about the product at your end. That is something which is actually proprietary. That never gets shared. What gets shared here is those units, anomalized units, which can actually impact. So I guess this answers both the questions altogether. Just one more point to the data privacy aspect. Yes, there are InfoSec groups, information security groups. There are masking of data that happens. At the lending side. This is at the lending side, which actually ensures that the data that is being sent of a customer, of an individual, of an MSME, whosoever, is actually protected. To the district level or a cluster level activity being done by the banks, yes, there are. We have what we try to do, and this is something which is globally now being practiced, and India in fact has district level GDSPs, gross domestic products, district level GDP. Over there, we are actually using satellite data to be able to understand what is the efficiency of a cluster? What can be the productive capacity of a cluster? Not going into too much detail because that's a bit proprietary, but yeah, that's what is being done. I hope that answers all of it.
Yes,
Thank you.
Tapan ji?
Just if I sum up, basically the idea, how the lending, what we are looking is we are just assessing the risk. And the risk carries a premium. For example, there is the models developed. With the data and digitization and AI use and all that, we are trying to make it more and more objective to remove the subjectivity. The system is the data which is being captured from the GST and all, income tax return, bank statements, maybe from the credit information, CIC reports we call it, which tells about the behavior, the past repayment track record of the customer and all that, which used to be done in a very subjective manner, which used to take a lot of time, and we were not able to throw the result on the immediate basis. But a lot of work goes beside that. If you say about the collateral and all, it's about incremental in the pricing, because ultimately it's you are rated on that basis. You are high risk, you are a low risk, you are very low risk, and that is a track record. The bank may look its past data for 10 year, 20 year and all that, how the behavior of a particular industry behaves or the customer of this profile behaves in the delinquency point of view. Accordingly, risk is capped or in the sense inbuilt into that. The digital journey from the approaching from the platform till the getting a in principle sanction, yes, no, and if this limit it makes it totally objective, which reduce the turnaround time, which makes it that anybody of the similar profile will definitely get the loan, get the sanctions, which may otherwise differ from the subjectivity from different geography and all. So, and as far as collateral is concerned, it is all related with the currency. If you have a collateral, sometimes the risk goes down and it gets reflected into your pricing. The bank will reduce the pricing if you are making it. So it's a model which has been developed looking into all the aspects. This is one question. Second, sir was telling about the way the analytics is being used by the bank very extensively. In fact, internally we have the risk management department which works every quarter, comes out with the data that this industry behavior has been like this, likely to be this. Then we will change our internal policy. For example, for industry, we were thinking that okay, this much should be the minimum promoter contribution. For example, I will say capital. Okay, if I give you 1 crore, 20 lakh should be from you. In certain industry, we'll say that okay, no, let us increase the risk stake. This industry behavior is going to be, or there is some change in the pricing and all that. So that study at the macro level, the bank carries out every quarter. They come out with our projections also. Like for this industry, we are positive, moderately positive, neutral. Sometimes we say cautious. So these internal studies are dynamically keeps happening, and we keep on getting these inputs, which is inbuilt in the digital journey as well. Particular industry of the similar profile may carry a higher risk premium vis-a-vis the other industry. So this is an effort to make it more and more objective, to have a quicker sanctions, quicker process, and quicker outcomes. That's it.
Very good. Mukesh ji, you have the last word before the chairperson.
So sir, to answer your question, in fact, that what are the problems and lack of skill. So as Anil ji was referring to, that about 98% units are under micro enterprises out of these 7.5 crore MSMEs being registered on Udyam registration. They are mostly run by a single person. The proprietorship firms are there. The most of the MSMEs are. The biggest problem is that he or she has to do everything, the purchasing, the production, marketing, finance, and nobody can be master of everything. Ease of doing is also one of the biggest problem we face day and night. I would like to refer one thing, a very senior professional who was the president of our Institute of Chartered Accountants India also. He was referring to that for some work he went to Singapore, and since he is dealing with the GST consultancy, so he asked the counterpart, can we do something here in Singapore also as far as the GST consultancy is concerned? तो वो बड़ी जोर से हंसे. So he asked, यार आप हंस क्यों रहे हो? उन्होंने बोला कि I am here in Singapore for last 30 years. पहली बार मुझसे किसी ने कहा है कि ये GST consultancy यहाँ पे. There is no system of consultancy as far as GST is concerned. Everything is online. You just click one button and your GST return is filed, and then no question asked. So we have to create that type of atmosphere in India also. And I suppose you are the best person to work towards this ease of doing business. Government is also trying to do a lot of things as far as GST, as far as the ease of doing business, but a lot needs to be done. One major problem I feel is HR related problem, because what happens, these micro, small, medium enterprises, they are not able to pay as much um, salary to the professionals. And in most of the time, these MSMEs are like a training centers for the few new professionals. They come there, they take training while doing their job, and when they are properly skilled, perhaps they are ready to shift to the large companies. So we need to work toward these things to make MSMEs more empowered.
Thank you. Thank you. I now hand over the stage to Professor Dua, Chairperson.
Well, thank you very much, Professor Ramsingh, for skillfully handling the Q&A session. And you will agree that the vibrancy in terms of the expertise of our panelists is matched by the vibrancy in curiosity of our students and researchers present in the auditorium. So I think we should give a big hand of applause to both parties. Not to mention the vibrancy of Professor Ramsingh in conducting this Q&A.
I was only helping the process. Yes.
Well, I knew you'd do it very well. So that brings to a close the Q&A session of the panel discussion, but I think we have something else left.
Felicitation, yes.
Yeah. So we'll now do the felicitation.
Thank you so much to our esteemed chair and distinguished panelists for such an insightful and engaging session. Now, we would like to move forward to the felicitation of our esteemed chair and distinguished panelists. For that, I would like to invite our director, Professor Ramsingh, along with Professor Dharamveer and Professor Paramjeet, to kindly come forward and present the mementos to our speakers and chair as a token of appreciation and gratitude. Mr. Mukesh Mohan Gupta. Mr. Anil Bhardwaj. Mr. Tapan Sharma. Mr. Deepak Pathak. And lastly, to our chair, Professor Pami Dua. Thank you so much, everyone. Now we would like to invite you to the lunch in the lawns. Thank you so much.
On behalf of the organizing committee of the third Delhi School of Economics Young Scholar Seminar, it is my privilege to welcome you all to the valedictory session here at the Vivekananda Hall. It is my honor to welcome the chief guest, Sri Narayana Murthy, for the valedictory session. We consider ourselves truly fortunate to have Sri Narayana Murthy with us today. To fully recount Murthy sir's contribution would perhaps require far more time than this session would allow me. So let me make an attempt to summarize by recalling what Swami Vivekanand famous words are, that give me 100 energetic young men and I shall transform India. If one were to imagine the cohort in contemporary India, I am with no doubt we can say that Sri Narayana Murthy would be certainly standing foremost among them, embodying the integrity, enterprise, and the nation building through institutional creation. I also take this opportunity to express our sincere gratitude to the Murthy Foundation, sir, for supporting some of our recent round of flagship events, the DSA Winter School. Sir, we are deeply honored by your presence. Your journey is in entrepreneurship, institution building, and ethical leadership offer invaluable lessons for our young scholars, for the students, as they step in their own professional path. It is also my privilege to warmly welcome the session chair, Professor Pulin Nayak, former faculty, former head of the Department of Economics, Director of the Delhi School of Economics, Dean of Social Sciences, various caps that he had. Welcome back to the home, sir. Your presence add great academic distinction to the valedictory session. Over the years, Professor Nayak has taught public economics, microeconomics, development economics, and has guided numerous MPhil and PhD students. Professor Nayak has made valuable research contributions to the literature of public economics and economic theory. Professor Nayak served on various important government committees. It includes the Prime Minister Economic Advisory Council. We are honored to have us today as the chair of this session. Thank you, sir. With these words, I once again extend warm welcome to all of you. And I would now request our chair, our distinguished speaker, and Director DSE Ram Singh, Professor Ram Singh, to please come on the stage. I will begin with the felicitation ceremony. I'll request Professor Nayak, chair of the session, to felicitate the speaker, Sri Narayana Murthy. Thank you, sir. I'll request Professor Ram Singh to felicitate Professor Nayak. I'll request Professor Ram Singh to make his introductory remark for the session. Thank you.
Thank you, Rohit. Shri N.R. Narayan Murthy ji, Professor Pulin Nayak, former Director, Delhi School of Economics, colleagues from Delhi School of Economics and other departments of University of Delhi, participants in the Young Scholars Seminar Conference, dear students and esteemed guests. It is a very opportune year and moment for us. A few months ago, we completed celebrations of Diamond Jubilee to mark 75 years of glorious existence of Delhi School of Economics. We celebrated Diamond Jubilee through a series of distinguished lectures where we had fortune of hosting best of minds individuals who have distinguished in their chosen fields of calling. It was in that context that I had reached out to Narayan Murthy ji. That time he could not accommodate in his calendar, but he promised that he will make a visit, he will come and interact with faculty, students at Delhi School and University of Delhi. We are thankful to him that he has fulfilled his promise, and that is the reason we have him here. This day happens to have a great coincidence, as if stars were aligned, that it happened to be in the final day, and that too, it happened to be a valedictory session for Young Scholars Seminar. Great coincidence. To Narayan Murthy ji, I would say that, sir, when we invited distinguished individuals like you, we invited them here to listen to them, to learn from them, but also ask them what do they expect from Delhi School of Economics going forward. You are son of a teacher, and it comes out very clearly that in the first go you accepted my invitation. You have very generously taken time out of your busy schedule to come here, interact with our students and teachers. That we greatly value the regards that you have for teachers, but I request you not to have any hesitations in telling us where, in your opinion, we need to do more. We will take your words very seriously. We will do our best to meet your expectations in coming years. At the same time, I would like to bring to your attention that Murthy's Trust is one of the organizations we have started to build association. We notice that Murthy's Trust is doing pioneering work in supporting science and technology in India. We feel that social sciences, policy issues, those areas also should be something that Murthy's Trust should think of supporting, engaging with proactively. With these words, I welcome you again, and we look forward to your speech and subsequently Q&A session with our students. Thank you so much. Yes. Yes, please. Or we can do both. You can still keep it here.
No, on top of that, no. We can close it.
Okay. It's an IT matter, so I will defer to you.
You're very kind. Very, very kind. Good morning, dedicated students, respected faculty, and distinguished guests at the Delhi School of Economics. It's an honor and a huge privilege to be back here after 20 and odd years. I have known, thank you, several of the former faculty members of this venerable institution, including late Dr. Manmohan Singh, Shri Amartya Sen, Shri Pranav Bardhan, late Sukumar Chakravarti, Shri Kaushik Basu, and a very distinguished student of this institution, that is late Mrs. Ahluwalia. One thing is very, very clear, that this is by far the most respected economic think tank of the country. Students passing out of here and faculty members from this institution have influenced the economic policies and strategies of our country, and therefore all of us laypersons bow to you and salute you for all your wonderful contributions. I am honored to be here, most importantly with the students, because I believe that bright, value-based students are our country's most valuable assets. It is our duty as elders, I am now 80, so to create opportunities for you to shine and make this country a better place, because you are the future of our country. There is nothing more valuable for this country than our bright, value-based youngsters. I also thank Professor Ram Singh for this kind invitation. Today I want to talk about a very important phenomenon which has impacted India and will impact India, and that is globalization. We are amid one of the defining phenomena of our age, that is globalization. As we navigate this complex landscape of interconnectedness, it is vital to reflect on its implications for our world. As Nobel laureate economist Joseph Stiglitz wisely stated, and I quote him, "Globalization is not a force of nature. It is a policy choice that countries make," unquote. This quote encapsulates the nuanced reality of globalization, a multifaceted process influenced by policies, economic strategies, and cultural shifts. At its core, globalization represents the increasing interdependence of economies, societies, and cultures, facilitated by the exchange of goods, ideas, and technologies across borders. My own definition of globalization, I'm an engineer, I'm quite used to saying things directly. My own definition of globalization is sourcing capital from where it is cheapest and operating where friction to business is minimum, sourcing talent from where it is best available, producing where it is most efficient and cost effective, and selling where the markets are without being constrained by national boundaries. That is my definition of globalization, which I came out sometime in late 70s. Infosys and the Indian software services industry form excellent examples of globalization. Indian software companies are listed on NASDAQ, where the price-to-earning ratios are favorable. They source talent from India, where it is abundant. They produce software in scalable, talent-rich, process and technology-driven, and cost-efficient software factories located in India. They sell their software services primarily in the developed markets, where disposable income and demand are much higher than in our country. Another good example is a shoe company like Nike. Nike designs its sports shoes for consumers in developed markets, including the US. They are then manufactured in the Far East, where labor productivity is high and production is most cost effective. They sell their finished products mainly in the developed world, where the markets are abundant. Apple is another good example. It's a paragon of global supply chains, sourcing components from multiple countries and assembling its products worldwide. Apple's interdependence across market is indeed a testament to the intricacies of globalization. As Apple CEO Tim Cook stated, and I quote him, "We're all part of a global economy." He emphasized the interconnected nature of modern business. Unilever operates in numerous countries, tailoring its products to local markets while leveraging global efficiencies. the company's ability to adapt to diverse consumer preferences demonstrates the significance of cultural sensitivity in a globalized world. Thus, we find ourselves in an era where actions taken in one part of the world can have global repercussions. This interconnectedness offers unprecedented opportunities for growth, yet it also poses challenges that demand our attention. What are the implications of globalization? Globalization is the process by which businesses and other organizations gain international influence. The result is not just economic change or even economic exchange, but it is also cultural, political, and environmental dimensions. Thomas Friedman, in his seminal work, The World is Flat, captures this complexity when he observes, and I quote him, "The world is flat. In the 21st century, the competition for jobs, markets, and ideas is at an unprecedented level. Globalization has made this world more interconnected, enabling both collaboration and competition. A smartphone designed in the Silicon Valley might contain components sourced from South Korea. It may be manufactured in Vietnam or assembled in India, thus exemplifying the intricate global supply chain that characterize our economy. However, this interconnectedness raises troubling questions about equity, responsibility, and the sustainability of our future. The roots of globalization can be traced back to ancient trade routes such as the Silk Road, which facilitated the exchange of goods, ideas, and cultures. This historical context shows that globalization is not a new concept. It has been part of human civilization for centuries. Contemporary globalization accelerated in the late 20th century. The fall of the Berlin Wall in 1989 symbolized the end of the Cold War and ushered in an era of increased economic integration. As former US President Bill Clinton remarked, and I quote him, "Global trade can lift millions out of poverty if we do it right," unquote. This notion became the motivating force behind the policies of many nations in the subsequent decades. China is a wonderful example of that. Key institutions such as the World Trade Organization emerged to promote free trade and economic cooperation, thereby facilitating market liberalization. Concurrently, technological advancements, particularly in transportation and communication, have transformed how we interact and conduct business globally. The internet, of course, as you know, has revolutionized the speed at which information flows, making the world feel smaller and more connected than ever. The benefits of globalization are numerous and have been championed by many economists and policy makers. Among them are: 1. Economic growth. Globalization has been a powerful driver of growth. By unlocking access to new markets, it enables countries to leverage their competitive advantages, enhancing overall economic productivity. As Milton Friedman observed, and I quote him, "The free market is not a zero-sum game. It is a positive sum game that makes it possible for the pie to grow," unquote. Second, cultural exchange. Globalization catalyzes cultural interactions that enrich societies. We are exposed to diverse cultures, cuisines, languages, and traditions, fostering mutual understanding. Anthropologist Arjun Appadurai says, and I quote him, "Globalization is a complex phenomenon that encompasses cultural, economic, and social processes." Third, access to resources. Countries benefit from access to vital resources and technologies that might otherwise remain out of reach. This access has driven significant advancement across sectors from healthcare to education. However, alongside these benefits, there are significant challenges. 1. Job displacement. Outsourcing has resulted in job losses in the developed world, displacing workers and creating economic anxiety. As former U.S. Treasury Secretary Larry Summers, himself an economist, pointedly remarked, and I quote him, "Trade with China has transformed our economy in ways we cannot yet fully understand." Second, cultural erosion. The global spread of dominant cultures can overshadow local traditions, leading to cultural homogenization. Sociologist Zygmunt Bauman warns that in our pursuit of global integration, we risk losing our identities and forgetting our roots. Third, increasing inequality. The benefits of globalization are often concentrated amongst the wealthy, exacerbating income inequality, particularly in countries like India. Economist Branko Milanovic eloquently states, and I quote him, "The benefits of globalization are not evenly distributed. They accrue primarily to the upper echelons of society." In reflecting on these aspects, it becomes clear that globalization cannot be viewed in binary terms. It is a complex interplay of opportunities and risks that necessitates thoughtful management and policy interventions. Countries that have successfully navigated globalization typically exhibit certain critical attributes. 1. They have strong institutions. Effective governance and stable political environments provide a fertile ground for economic growth. You people know it better than I do. Nations with transparent legal systems are better positioned to attract foreign investments. Second, an accountable political leadership and bureaucracy. Nations with well-informed politicians and a bureaucracy grounded in transparency, accountability, speed, excellence, and global benchmarking have benefited significantly. Third, investment in education. A well-educated workforce is crucial for adapting to global market demands. Countries such as Finland and Singapore, which prioritize education, enable their citizens to thrive in the global economy. Fourth and last, robust infrastructure. Modern transportation and communication networks enhance a nation's capacity to engage in global trade and strengthen economic resilience. Examining the countries affected by globalization reveals a spectrum of experiences. China's economic transformation exemplifies the profound benefits. Since opening its markets, it has lifted hundreds of millions out of poverty by creating jobs. India's 1991 liberalization opened pathways to growth, particularly in software services, and thereby creating 5 to 8 million jobs for the well or reasonably educated middle class Indians. Former Prime Minister Dr. Manmohan Singh affirmed, I quote him, in India, we have found that globalization has offered us new opportunities to integrate with the world economy, unquote. Conversely, many African nations have struggled to capitalize on globalization due to systemic governance challenges. While industrialized countries like the United States and the United Kingdom have experienced deindustrialization and economic despair in manufacturing hubs, recent years have seen globalization face significant headwinds. You all know that. The rise of nationalism and protectionist policies signals an urgent need to examine the existing global order. The COVID-19 pandemic further exposed vulnerabilities in global supply chains, making it clear that we must rethink our approach in the post-pandemic landscape. India's journey offers insights into both the potential and the pitfalls. While IT services have blossomed, significant disparities remain. The urban-rural divide and income inequality continue to pose challenge. Recent government initiatives aimed at skill development and digital literacy seek to address these gaps. But we must continue to pursue inclusive growth. What lessons can we glean from globalization? Firstly, adaptability is a necessity. As Paul Romer, a famous economist, once stated, and I quote him, a crisis is a terrible thing to waste, unquote. Secondly, the imperative or inclusivity must remain central. As Professor Amartya Sen articulated, and I quote him, development is not only about just the income, but also about expanding freedoms. As you all know, he has written a book on that. Finally, robust risk management is pivotal. Imagining a world without globalization reveals profound consequences like technological stagnation, dwindling cultural exchanges, and an insular perspective. However, Milton Friedman emphasizes that there is no alternative to globalization. Most nations that have succeeded in globalization have created a sound economy with a commendable trade surplus. China, with its $3.6 trillion in exports and $1.2 trillion trade surplus, is the more shining example of the power of globalization. It is important to remember that globalization succeeds only when there is a balance of trade. Only when a nation identifies its unique competitive advantage and provides the best value for money to global customers. We must be concerned that the Indian rupee loses value against the US dollar by about 3 to 4% year after year after year. The only way to correct this is to increase our exports to create a trade surplus. To succeed, we must improve our education system, learn from successful peers, invest in R&D, and remain disciplined. India's work productivity must be enhanced to compete globally. We owe it to future generations to build a strong foundation today through aspirations, intelligence, and hard work. As we look to the horizon, the future of globalization will evolve towards regional trade, sustainability, and digital transformation. India has performed very well in digital globalization, exporting its UPI-based products to several countries. In conclusion, globalization is a profound phenomenon that has irrevocably altered our world. Let us embrace it as a strategic policy choice, one that requires collective action and a commitment to thoughtful governance to foster a more inclusive and more prosperous future. Our interconnectedness because of globalization is both a privilege and a responsibility. Thank you very much for your attention.
Thank you. We will take this. Thank you, sir. Thank you. Shri N.R. Narayana Murthy, Dr. Ram Singh here, audience here, faculty members, and dear students. Well, my role here is essentially to moderate the question answer session, as I understand, but also to make a few comments about the topic at hand. But before I do that, let me say that this has been an absolutely wonderful and complete lecture on globalization. I was wondering how the lecture would go,
will it be only extolling the virtues of globalization, which of course Sri Narayana Murthy ji did, but he also pointed out the various possible challenges that globalization offers and presents, which need to be looked at with great degree of care in specific contexts. Now, globalization, of course, is as old as the beginning of humanity. Human beings are bodies which revel in exchanges. This is an essential quality of human beings, to be social beings, and because they are social beings, they have to exchange information, they have to exchange their cultural attributes, they have to exchange their values, and so it is inherent in human beings to exchange. So the Silk Route idea that was mentioned goes back almost 2000 years or even more. Now, among economists, the idea of globalization emerging from free trade is possibly one of the oldest central ideas. And of course, Adam Smith talked about it, David Ricardo talked about it, and if I may say, possibly the biggest single central idea in economics very often is attributed to David Ricardo, the idea being the idea of comparative advantage. You could have countries, you could have, say, two countries, this is the Ricardian example, England and Portugal, and it is possible that one country may have absolute advantage in the production of, let's say they are trading two commodities. One country may have an absolute advantage, but Ricardo showed that if the factor ratios, if the cost of production ratios differ, then there is reason for trade, even for a country that has higher per unit cost to produce the goods. In other words, it will only be a flukish situation where the comparative cost of the two commodities, wine and cloth, as Ricardo was looking at, it would be a fluke if the two countries, England and Portugal, will have exactly the same factor cost ratio. Barring that flukish situation where there'll be no reason for the countries to trade, in the more general setting, it will always be important for countries to trade, and David Ricardo showed that. So it was a demonstration of the fact that you always have reason to benefit in trading with each other. Now, this simple idea was looked at, and of course, economic theory through the post-Ricardian, post-Smith Ricardian phase has looked at this thing, this particular notion, and it is clear that globalization and its advantages continue to be the central idea of the discipline of economics. But having said that, it is also important to understand, as Dr. Sri Narayana Murthy ji also mentioned, that there are some problems that we need to be careful about. Globalization can have consequences on distribution of income. It can have consequences on distribution of income in the developing countries of the world. It also has consequences on distribution of income in the developed countries also. If you look at income distribution in the world today, among the highest income inequalities is our own country, India, along with certain other countries like South Africa and so forth and so on. But India has a very high income inequality. And globalization, while it offers many advantages, it has to be managed and it has to be governed in an appropriate way to make sure that income distribution doesn't become too unbounded. Of course, there are other aspects of globalization also. It has consequences for jobs and job losses. If with international trade, there are situations where certain kinds of activities or industries might get neglected. In the Indian setting, there was a long period in the 19th century, students of economics will know that there was this deindustrialization. So many of the traditional sectors which were having a reasonably good market for their goods in a certain traditional setting saw the difficulties of import during the colonial period, import of mill-made goods coming in from England into India, and that created deindustrialization in India. So there are problems on income inequality, there are problems on jobs, and there are also cultural issues. Globalization may lead to a situation where the dominant countries may expand their sort of knowledge and cultural attributes which are taken up by less developed countries, with consequences, with societal and other consequences for those countries. So, but all of these points fortunately have been brought out very tellingly and very nicely by Sri Narayana Murthy ji. So many thanks to Sri Murthy ji for the presentation. I'll conclude by saying this. Sri Murthy ji also said that there is every reason for us to think in terms of doing activities here in India which reach the global standards, and thinking about Indian academic institutions, including the Delhi School of Economics. Just before coming in here, we were talking about what is the ranking of Delhi University or say the Delhi School of Economics in the international ranking. Now it so happens that our ranking still is somewhere less than 100, somewhere around 120, somebody found out. Now what we have here is a situation where Murthy ji, Narayana Murthy ji himself is a person who has demonstrated that as the founder of Infosys, he has taken this particular corporate body into the highest levels of international quality. So what I wanted to say was that if there is a determination to perform with quality, it can actually be done, and it has been shown by Infosys. So there is the future is there for us, and if the combination of the mental work power and hard work, everything else is put together by this particular generation, then I think much higher heights can be obtained for all of us. So thank you. And now there are going to be some questions and answers which Narayana Murthy ji will be answering. Yeah. Thank you.
Thank you. Please. Thank you. We will open the session for question and answers. Before that, I will take a minute and a half to thank our eminent speaker, Narayana Murthy ji, and chair of the session, Professor Pulin Nayak. So between two of them, they have delivered a very well-rounded, comprehensive lecture on globalization and its different dimensions, including for distribution. Narayana Murthy ji, our students are going to ask questions. Sure. But one question I want to present to you, at some point you can reflect on it. Technology has played an important role in forms of globalization and also on growth and distribution. AI, artificial intelligence, has come to acquire prominence that IT services got about 25 years ago. So much so that even IT companies are facing heat. Stock market performance of IT companies is facing heat from AIs. There are also concerns that AI might replace some jobs and might automate services that even the software companies have been performing. So I'm sure my students here are interested in whether what is at stake for them, how they can benefit from this opportunity, or there are things they should be concerned about. So I now open the floor with the permission of the chair to Q&A. We will take 2-3 questions in one go, and we will have multiple rounds of question answers. So please.
I have only one request. I would like the alternate questions to come from a lady and a man, because I find that in India, generally men are very aggressive and they corner all the questions. So first a lady and then a man, lady, man, etc. Yeah.
We will do that, sir. But I would like to assure you that at Delhi School of Economics, generally there's a dominance of girls. In our classroom performance, in attendance, so here you can see gender ratio is in favor of women here. So, and you will see that reflected through Q&A session also. Yes, we will start with a girl student. Yes.
Please introduce yourself and then ask the question.
Yes, there. Yeah. Please keep
Hello.
your question pointed.
Hello. Thank you so much, sir, for the wonderful session. It was really insightful and our pleasure to be here. I wanted to ask that
No,
recently...
please introduce yourself.
My name is
Your
Jana
n-
Kukreja. I'm pursuing...
What you are studying? All of that.
I'm pursuing Masters in Economics from Delhi School of Economics. My question is, recently Microsoft AI chief Mustafa Suleyman said that most professional tasks, just like sir said, will be fully automated by AI within 12 to 18 months. So adding on to this, I wanted to ask, as AI shifts global advantage from scale to innovation, how can India move from being the world's talent factory to becoming a global hub for original ideas? And as sir said, that what skills should we prioritize to still be relevant as students? Thank you so much.
We can take 2 questions or one at a time.
No, I'll answer one at a time. Well, I think that is a very important, very intelligent question. My own view differs from what was said by the Microsoft AI chief. I believe that there will always be an opportunity for bright minds in the world, whether it's India, Timbuktu, UK, US, it doesn't matter. Yeah. What do I mean by that? What technology does is, by and large, technology automates jobs that can be done on a rote basis, and it helps human beings to move up the value chain, to use more and more thinking. For example, banking, computerization. All that it did was it allowed every branch to close its books by 6 p.m. Earlier it used to take 11 p.m., 12 p.m., sometimes for several days it was not done. And it released that time for employees to deal with customers with much greater attention. Now let me come to my own industry. The biggest challenge we have in our industry is not so much coding, programming. Programming is not that difficult. What is difficult is how do you spend minimum amount of time with a customer, ask the best questions and obtain maximum amount of information that is complete. Of course, as you know, Gödel proved that no formal system is complete, but within the context, as complete as possible in the minimum amount of time. So more and more time will be spent in what we term requirement definition, and more time will be spent in standardization, in creating what we term skeletons, in any online system you have the data entry program, you have the inquiry program, you have the report programs, you have the batch update programs, etc. For each of these, we will use AI to create very powerful and very strong and error-free skeletons, and we will use it. So it will help you improve productivity. But the task of asking the right questions in the minimum amount of time and obtain as much of information from the customer which is as complete as possible will continue to be a challenge. Let me give you a very simple example that I myself have been involved in the last 3 years. I have been using Gen AI for producing the draft of my speeches, including the speech that I gave here. I've sent it to Professor Ram Singh, and at the bottom I have acknowledged that I have used a Gen AI tool for the draft. What I have found over the last 3 years is the smarter I am in putting the prompts, better is the draft. That is, more thought I give in preparing the prompts, better is the draft. So my belief is that the opportunity for human beings to think better and better and better will never go away, never. However, if I am one of those who will do a drudgery job that a machine can do, yes, I will lose that. But the way the transformation will take place is all companies will focus a lot more on requirement definition. Let me give you another data point. See, in 1975, of course you people were not born, there came a set of tools called CASE tools, C-A-S-E, computer-aided software engineering tools. There were hundreds of articles written saying that there'll be, all programmers will lose their jobs, etc., etc. But the human mind is the most ingenious instrument. What the humans started doing, including, at that time Infosys was not there. I was the general manager of a software company in Mumbai. What we started doing was, we became greedy and we started solving bigger and more complex problems. We started developing bigger and more complex information systems, and case tools couldn't handle them. Therefore, after a few years, after 5-6 years, they disappeared. Second, in 1971, when core banking was introduced in the UK, the banking union staff went on strike. What the premier at that time, I think it was Ted Heath, what he did was he brought together a team of several CEOs plus some professors from Oxford, Cambridge, Manchester, Southampton, and Edinburgh. And he told them, you have to convince the union staff the pluses of this. And they did a brilliant job, all these professors. And the result was, as we all know, the banks expanded their network. They employed 10 times, 100 times more employees in banking, etc., etc. But they were not doing this balancing the books in the evening that went up to 12 midnight and all of that. They were doing different types of job that required more and more thinking. So my own view is, while technology will take away some of the drudgery jobs and improve productivity, there will always be opportunity for bright, hardworking, innovative, and disciplined minds.
Sir, this you have put it very well. You actually have justified what we do at Delhi School of Economics to our students. Okay. Our students constantly complain that we make them work very hard. We are hard on them. So you have given some justification to what we are doing to them. Let's now go to the next question.
Now a boy, yeah.
Here, yes, Mike is here, so we will take a question from here.
Please introduce yourself.
Yes, sir. Good evening, sir. My name is Benjamin, and I'm pursuing my bachelor's in political science at Ramjas College, University of Delhi. So my question in context was, yes, we know that globalization has resulted in spread of ideas, but it comes with a big disadvantage that the ideas that are present to an individual has been oversaturated. That means various options and multiple of ideas, especially in media-wise, whether it be from YouTube or Instagram. And it gets worse when more people are depending on Gen AI as well, when it comes to figuring out what ideas in terms of career-wise or personally to pursue in. So my question was, we as students of this nation, what habits should we inculcate? Also habits and also caution, things to be cautious of, especially that would benefit us career-wise or personality-wise, in such a way that we present to be best of the best and in contribution to nation building in this era of oversaturation of information as the youth of the country. Thank you, sir.
Well, I don't know if I would use the word oversaturation or even saturation. This word saturation itself, there is nothing like oversaturation. Saturation itself is the limit, right? My view is, I take it as a positive. Today you are brighter than me. You think a lot more than I do because you have many more choices than I had when I was your age, probably 55 years ago. Now what that also means is, you have a certain responsibility. That is, you have to think more. Unlike me, I had really no choice. I had only one path and I had to walk in that path. On the other hand, today, you have 7 or 8 paths and therefore you had to think a lot more than I did. That will make you a better thinking human being, a better quality person, because you know at the end of the day, you have only this much of time. And the smartest person is one who optimizes the use of his or her time. You know, my brother-in-law, my wife's younger brother, is a very well-known professor at Caltech in astrophysics. And once I asked him, what is your biggest concern? He said, my biggest concern is how I use my time, because that is limited. So similarly, you will start learning how to optimize your time, because there's a plethora of choice. So choice to me is a boon rather than a bait. For example, at one point of time, we had only Doordarshan in 1982. That is all what we could see. But today you have probably 500 channels. Some of them help you become better educated in science, some help you in become better educated in culture, some in entertainment, whatever it is. Now you will have to use a little bit of time in choosing what you want to watch, but at the end of the day, you derive greater pleasure than what I could, just watching the same Doordarshan stuff. So I don't think choice is a penalty. I think choice is a privilege.
This is turn of a question from a girl.
Yeah.
Try to speak louder.
Respected Dice and Namaste sir. So myself Malavika from IIT Madras. So I'm an energy economist basically. So I would like to ask you about your firm's aspects on cleaner technology and net zero goals on India's visionary. So on what aspects Infosys is leveraging this opportunity towards sustainable Indian goals?
Well, let me say this. I retired from Infosys 12 years ago. So it is not proper on my part to talk about what is going on. However, I will tell you what we did. We were voted, I don't know if you have seen that, by Newsweek magazine as one of the top 8 companies in the world which had embraced and executed sustainability practices very efficiently. Just they chose only 8 companies in the world. This is in 2010 or something, and we were one of them. Anyway, what is it that we did? First of all, we ensured that we built lakes in various campuses so that we preserved the rainwater. For example, in our Mysore campus where we hold the initial training, there are 10 lakes. Almost in every campus we have built lakes for water preservation. Second, we used the toilet water, we cleaned it properly and used it for all our lawns, etc. The youngsters were not very keen that we use it for bath and all that, though personally I didn't mind that. I would have taken bath with that, but at the end of the day we had to make our youngsters comfortable. Third, we built a solar power unit. We bought a 1,000-acre land in Chitradurga, which is about 150 kilometers north of Bangalore. And as you know, it takes 4 acres per megawatt of solar power generation. So the last I heard, we had implemented solar power generation in 250 acres of that, which means we produce 62.5 megawatts of power. And we actually feed it to the grid, and then we get credit. Then we developed technology whereby we would automatically switch off all the PCs once there was no human being in the room. Once there was no movement of people, all the PCs and all the equipment will be switched off, except if you need it. Then we ensured that we saved water for taking bath in all our hotels on various campuses. We have hotels on various campuses. And we educated our people that there is water shortage in India, etc. Like that, then we constructed our buildings in a north-south fashion, so that the sun's rays did not fall on the windows, or we minimized it. Therefore, our air conditioning load got reduced. So we did many of these, and thereby I have no hesitation to say that all the inspectors who came to look at us, they were totally satisfied that we had done quite a lot of work on sustainability, on energy saving, on use of green energy and all of that. And then, you know, we have built, we planted, for example, in every campus we planted thousands of trees. For example, in our Mysore campus, we planted 200,000 trees. So that kept the environment clean, that kept the environment cool. So these are some of the things that we have done. Whatever, I have no problem.
So, sir, this is turn for a question from a male. I want to slip in one sub-question, sir, given the nature of the turn. So you have said that future is bright. There is always going to be demand for somebody who is talented, hardworking, and sincere. But question then is, what about those who are not talented, hardworking, or sincere? Or you think that that the talent / knowledge is a cumulative outcome of hard work and sincerity, and these two behavioral attributes are not innate, but they can be acquired. This thought came to my mind, but I will let somebody.
No, let me try
Or
and
the
address
distribution.
that.
So
That's
if I can add,
yeah.
what about the distribution? Distributional consequences of technology, and what should we not think about those who might get left behind, perhaps who will necessarily get left behind in this process?
I think it's a very important question. Let me address that. My belief is that no matter how unsmart I am, if I put in hard work, if I am sincere, generally I have found that my bosses respected me. the very fact that I put in 20% more effort compared to my smarter colleagues, the fact that I was enthusiastic to do that, that itself was a big piece for my bosses. I still remember when I was in my high school, I was very good in science, maths and all of that, always 100. But when I took my marks card to my father, who was a teacher, so he asked me, and I had got some 60 and odd in history and geography and all of that. So he said, bring your timetable. I had no timetable. So then he sat down with me and then told me, the smartest person in the world is one who values his or her time. And the way you value your time is, you apportion your time based on your strengths and weaknesses. So he said, knowing that you are not as good in history and geography as you are in physics, mathematics and all of that, therefore you must put in a little bit more effort in history and geography. So my belief is, doesn't matter how untalented I am, using proper methods like time management, being sincere in our attempt, will make us a valuable member of the team. People understand the there's a normal distribution curve, and not all of us are in the right side of the normal distribution curve. There are some of us who are on the left side too. But people understand. Where the problem comes is what we call kamchor. Fellow who is not interested in working, he or she wants all the benefits, but they are not interested in working. Those are the people that create problems. So all that I would say, don't worry, use whatever God has given you to the maximum extent by using methods, processes and technologies that are available around you, and that will improve your confidence, and then over a period of time you will become a highly valued member of your team. That's been my experience.
Thank you, sir. So, sir, who gets to ask the next question?
I think now it has to be a lady because you are a man.
All right. Yes, a question from... so we want to cover all parts of the hall.
Yeah,
if there's a question from a girl
that's right,
and backside, we will take that. Otherwise, you are... and we are looking at the second half of the hall, yes, the back side of the hall, yes. Yes, there's a question there.
Please.
We will come to you, hopefully, yes.
Please.
Good evening, sir. Thank you for your session. My name is Saloni. I am a first year MA Economics student. So, sir, my question is, if globalization is both a choice and a responsibility, what responsibilities does India carry as a rising power in shaping a more equitable global order?
Well, at this stage, I don't know if we would consider India a global power. I think we must be a little bit humble. We have done well, definitely we are growing, but at the same time, kindly remember, we give free ration to 850 million Indians. that is. Therefore, we have to be a little bit humble. We have to realize that there are countries that have performed better than us. We have to learn from them. We have to have some humility. So having said all of that, I think whatever we can add value to countries that are much lower than us, we are probably 137 or something in Human Development Index. The countries below us, we are already doing. I think India is already helping, sending teachers, providing aid, bringing their students to institutions here. We are doing all of that. But the most important request I have for all of you youngsters is humility is very important. Kindly be humble. Realize that, just now Professor Ram Singh said, Delhi University is 128th in the world. It's not number one. It is 128. It's not my words. It is what I was told. So therefore, it is a little bit out of place to say, what is it that I can teach the rest of the world? First, let me ask, what is it that I can learn from the rest of the world? Because I want to move up from 128 to 1 in 10. So, I hope you don't mind my saying this. I think let us all be a little bit humble. I mean, that's what I was taught by my parents. I'm sorry. This is the way I was brought up. I was brought up to be humble, to learn from people who have performed better than me, to have a hunger for becoming better year after year, etc. But as I've already told you that we can help countries which are poorer than us. There are some African countries which are poorer than us, and those countries I think we are already helping.
So next question comes from male, yes. Boy, yes, here.
First of all, good evening, sir. And this side Ujjwal Bajpayee from Ramlal Anand College, South Campus, pursuing Political Science Honours. My question to you is, in an era of geo-economic fragmentation, how can India ensure strategic autonomy in AI and semiconductors without isolating itself from global innovation? And does Atmanirbhar a shield or a barrier to deeper integration? Thank you, sir.
I don't think I understood your question clearly. Can you please repeat the question?
So my question is, in an era of geo-economic fragmentation, how can India ensure strategic autonomy in AI and semiconductors without isolating itself from global innovation? And does Atmanirbhar a shield or a barrier to deeper integration for India?
No. Atmanirbhar is necessary. There is absolutely no doubt about it. We have to become self-sufficient. But becoming self-sufficient does not mean that I should become isolated. Because today, LLMs use whole internet, right? You need access to entire internet, and the reality of internet is 90% of the knowledge is outside India. Most of it is in English. So therefore, we cannot say that we will make progress without integrating ourselves with the global economy. But at the same time, in areas where we need to be self-sufficient, like in defense, food, clean air, clean water, all of those, definitely we have to use whatever technology we can get from wherever it is possible and then become. For example, solar panels, they mainly come from China, right? So we get mainly from China. So we cannot say, no, we will not use solar panels from outside and then we will get to green energy. So the reality is that while we will learn to trade with other nations, we will do it in a way that will protect dignity and respect for us. That is where I am very, very happy with this stand that has been taken by Prime Minister Modi and Government of India in the recent trade issues with a highly developed country. And that is required. That is required. Nobody should take us for granted just because we want to benefit from their technology. They cannot treat us badly. But that does not mean that we should be isolated. We cannot be isolated. We will take whatever is useful for us, paying the fair price in the global market from whosoever is ready to sell us, and our youngsters like you will add value to that and adapt it to our circumstances and make us stronger. That's what I would say.
Thank you, sir. We will take a next question from the balcony. There's a mic there in the balcony. But question will come from a girl.
Yeah, please.
Good afternoon, sir. I'm Feina, a second-year master's student at Delhi School of Economics. And I love the way you gave constructive criticism when the question of India being a global superpower was asked. In the same context, regarding the education system in India, what are your views and what is something that you would like to change about the current education system?
Well, our education system is the reason why we are not making the required progress. What do I mean by that? See, a small number of people do well, they go away to developed countries, and rest of us who are here, we have learned to use technologies, inventions and innovations that come from outside India. For example, this whole AI, LLMs came from outside India. The whole concept of AI came from outside India. This LEDs came from outside India. This microphone came from outside India. Those speakers came from outside India. That laptop came from outside India. So the reality is that our education system, thanks to the rulers from 980 AD to till the British came, where unfortunately they were not interested in the kind of education that was needed, which India was practicing before they came. That was completely neglected. Second, when the British came, they trained us to become good clerks, to do what we are asked, and a few people to do higher responsibility tasks. But that's not how invention and innovations take place. Right from our primary school, we must help analytical thinking, critical thinking, Socratic questioning, observation, relating to what is taught in the classroom to the phenomenon outside. Those things. You know, I hope you don't mind my saying this. This is from the autobiography of Ishar Ahluwalia, who is no more. A very, Montek and Ishar have been very close.
An alumna of DSC.
Yes, she is an alumna of DSC. In her autobiography, she writes, if you were not born at that time, in 1966, June 8th or whatever it is, Sachin Chowdhury, the then finance minister, under Indira Gandhi, he devalued the Indian rupee from approximately 4.5 rupees to 7.2 or something, approximately. This kid, she was a top student, she went to MIT, did a brilliant PhD and all that. She sat up to 2 o'clock in the night and read, and then what are the implications of devaluation, rupee depreciation, what will happen to our imports, what will happen to interest rates, etc., etc. I believe this is written in the book, all of you can verify it. She came next day to the class expecting that would be discussed in the class. Nobody bothered about it. And when she went to a professor talking about it, she said, no, those things we don't worry. We teach what has been written by some Paul Samuelson or this fellow, that fellow. That is the tragedy of Indian education. We do not relate what is taught in the classroom to what happens in the real world around us. The girl Shrivani who picked me up at my place, and she and I were talking, and I was telling her how Einstein came out with his with his special theory of relativity. Einstein was a clerk in the patent office in Zurich. He would finish his work quickly and then he would think about various issues. One day, he analyzed the orbit of Mercury, or what is called perihelion of Mercury, and he found that it didn't fit Newton's laws of motion. So he said, what is this? At that time, Newton's laws of motion was the ultimate. As you know, Mercury is 29 million miles from Sun. We are 92 million miles from Sun. And in between is Venus, which is about 50 to 55 million. Because he observed the orbit of Mercury and the abnormality of Mercury, he found out that the huge mass of the Sun, as you know, Sun's mass is 1,000,000 times that of Earth, because Sun's radius is 400,000 miles and the Earth's radius is 4,000 miles. So he came out with special theory of relativity. So the point I am making is, our youngsters, if they learn economics here, then they should be able to explain what happens to interest rates if our exports go down, or if our imports come up, or what happens to exchange rate. There are hundreds of things that you people can think of. The most important thing that children should learn right from the primary school is to relate what is taught in the class to the real world around them.
The next stage is to observe the world around and then start thinking, why is this not fitting the theory? The next stage is to say, this appears like a big bottleneck. How do I solve it? That's how they came out with, for example, when Alexander Graham Bell invented phone, he said, I want to talk to somebody with 100 miles away. Why am I not able to do that? And they invented telephone. And somebody in Britain said, I think Bardeen or somebody, I don't remember, said, why can't I see what is happening 100 miles from me? So he started working on that problem and they invented television. So the point I am making is, first stage is learn what is taught in the class and try and apply it to understand the world around you. Second stage, learn what are the things that do not fit in with whatever has been taught. Ask your teachers, think about it, read books. The next stage is to say, is there something lacking in my theory that I have to revise so that that phenomenon which is not fitting into the theory that I learned can indeed be handled by modifying my theory. And the fourth stage is ask, what is why is this a lacuna? Why can't I see what is happening around 100 miles or fine, like that. I think if our education system were to help our children, these 4 stages, I think we will invent a lot of things. But otherwise, the tragedy is that we have not invented anything. No, we have come to the level where we can understand what has been invented elsewhere. But we have not invented anything. I mean, look at this room itself. This air conditioning is invented. That light is invented. Phone, this mobile phone is invented. This is invented. Everywhere, thing was invented outside. So, if we want you and your children to invent something, you have to change the way our children are taught right from the primary school. And when they come to Delhi School of Economics, if that is practiced, they will produce some of the finest pieces of research. But that will only happen if you start at the primary school.
Thank you, sir. Thank you. Thank you for the engaging session and taking questions from our students and scholars. Sri Narayana Murthy has, out of his time, has kindly agreed to help us and hand over the certificate to the scholars who have participated in the third Young Scholar this year. So I'll read out the names and we'll start giving away the certificate, if all of you can come in the front. Ajay Bhosle. Anindita. Ashmika. Anandita, then Ashmika. Bhavna. Deena Mani, K. Chandrasekhar, Keshav Shetty, Keshav Sethi, Malvika, 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 yeah. Mahima, Meera, Mrityunjay, Prabhat, Pragya, Prasanjit, Rishabh, Safira, Sangeeta, Safira, Sangeeta, Satyati, Sonali, Sona, Xiaomi, Shubham, Tanya, Vamika, Vanashri, Yuvraj, Sandli, Shivani, I would now request the dignitaries to take the dais and would request my colleague Deepak to please come and present the vote of thanks.
Thank you, Rohit. Good evening, everyone. Respected Sri Narayana Murthy sir, Professor Pulin Nayak, distinguished speakers, esteemed chairs and discussants, faculty members from DSC and outside DSC, conference participants and dear students. On the behalf of organizing committee, it is my pleasure to propose the vote of thanks of the conclusion of third Young Scholars Seminar organized by Delhi School of Economics. Sir, we are truly honored to have had your interactive session on globalization, and you have also talked about AI and education system in India. Thank you very much, sir, for accepting our request to deliver this session on the final day of seminar despite your extremely busy schedule. Your insightful talk and inspiring words have encouraged us to think beyond borders while remaining rooted in responsibility. Now, to briefly talk about the Young Scholar Seminar, it is a unique platform focused on early career researchers, and it is a fully funded program that provides a barrier-free opportunity for academic interaction, exchange of ideas, and meaningful networking. Across multiple parallel sessions, going from structural transformation, digital markets, labor, gender, and education to climate change, financial inclusion, agriculture credit, political economy, and MSME dynamics. The depth and diversity of research presented here have been truly remarkable. On the last 3 days, this seminar has been a genuine celebration of ideas, inquiry, and intellectual engagement. Now, I would like to thank Professor Ananya Ghosh Dastibar for her informative and engaging lecture on the twin balance sheet crisis, which provided rich insights into macroeconomic challenges and the future policy lessons. I also extend my sincere thanks to Professor Dilip Mukherjee for his lecture on misallocation and welfare implications of SMEs, which enriched our understanding of farm-level distortions and resource misallocation. The keynote address by Dr. Saji Kevi, Chairman of NABARD, highlighted how rural MSMEs can play a catalytic role in India's inclusive growth. Also, today's MSME panel discussion brought together policymakers, industry leaders, and practitioners, making the dialogue not just academic, but closely connected to the real-world challenges. Now, I would like to thank all the panel members, Mr. Anil Bhardwaj, Secretary General, Federation of MSMEs, Mr. Mukesh Mohan Gupta, President, Chamber of Indian MSMEs, Mr. Deepak K. Pathak, Lead Data Scientist, IDFC First Bank, Mr. Tapan Sharma, Deputy General Manager, SBI. Now, I would like to express my sincere gratitude to all our distinguished speakers, chairs, and discussants who not only shared their expertise, but also engaged constructively with young researchers. Also, to every presenter who traveled from different institutions across the country to share their research and contribute to this vibrant academic exchange. Most importantly, I would like to thank the Ministry of MSME, Government of India, for their generous financial support and encouragement for this event. And now, the most important, a particularly heartfelt thank you to our volunteers. The conferences may run on ideas, but they survive on volunteers. Thank you for your dedication, patience, efficiency, and most importantly, your constant smiles. I would also like to thank the administrative and support staff of Center for Development Economics, the Director's Office, the Department's Office, for their invaluable behind-the-scenes efforts that ensured the smooth conduct of the seminar. Over these 3 days, we have not only exchanged research findings, but also built networks, friendships, and future collaborations. As we conclude, let us carry forward the spirit of inquiry, rigor, and collaboration that has defined this seminar. So finally, on the behalf of the organizing committee, I thank each one of you for being a part of the third Young Scholars Seminar at Delhi School of Economics. With this, we formally conclude the seminar and invite everyone to join us for the high tea. Thank you very much, everyone. Thank you. Yeah. So I would like to invite the organizing team to come on the stage for the photo session.
आप बैठ ही जाएंगे पीछे खड़े हो जाएंगे सर बैठे से खड़े हो सर आप बैठेंगे और पीछे से आ जाएंगे सर प्रोजेक्टर ऑफ कर देना
So now I would like to call all the volunteers to come on the stage for the photo. Or some people can stand there if they are not coming in the front. हाँ बैठ जाओ हाँ कुछ लोग अभी नेक्स्ट फोटो में नीचे चले जाओ खड़े हो जाओ तो नहीं दिख रहे हैं इवन नहीं आया ना तो लोग नीचे खड़े हुए हैं
हो गया